the Twitter space is also going. So welcome in, everybody. 2:45, I think. 2:46. Come on in. Do confirm that you can hear us okay. And yeah, I interrupted a conversation, so y'all continue. I'm going to run to the other room to make sure that it's also working on Twitter Spaces at Tesla TSLA 247. But yeah, continue. Ross will be joining us in a minute. Alexandra will be joining us probably in the next 45 minutes. And then Gary will be joining us towards the end of the conference call. So we're going to have a little bit of a stagger. So come on in. Sorry for interrupting. Keep going.
No, you're good. Yeah, thanks everyone for joining. It's kind of a interesting setup. You know, I was just we're talking backstage here before, and I was like, I'm actually quite stoked this earnings live stream because I don't have to sit around for 4 hours by myself and just like try to make up conversation, read through. Like, it's just so much easier having a group of people come around. And if you see Nick and Matt here, Farzad just run away. But if you see Nick and Matt, they're just going live on their channels here, so it's going to take a second. But I see everyone in the chat here. So for everyone that's wondering, I'm trying to monitor my chat, but I'm also going to try to monitor Farzad's chat and Nick's chat and Good Soil with Matt's chat as well. So it's going to be a little bit of a gong show. I'm going to try to prioritize mine just because I'm already seeing a million comments come in there. But let me know where you guys are tuning in from, city, state, country, whatever you guys feel comfortable sharing. And throw your non-GAAP EPS estimate best guess in the chat as well, and maybe we can revisit that after. But Matt, Nick, welcome.
Thanks, Yashu. Good to be here.
Yeah, man, absolutely. This is gonna be fun. I mean, this is we're either gonna celebrate together or cry together, one or the other.
I mean,
I have
those can
my
happen
weapon
together.
of choice.
Good for either outcome, right, Farzad?
Exactly.
well, I mean, what if we're
exactly
flat?
Right.
What if we're flat? Then how do you?
If we're flat, you can't drink.
we're
You
not
gotta stay
drinking.
sober.
Yeah. It's got to be water. You can only drink water.
There you go.
Yeah, for some reason, I have a feeling it won't be flat. I feel like it's just binary, rip or dip.
I'm actually an idiot. I forgot my oranges in. I'm actually someone clip that. I actually left my oranges in the trunk.
No way. Go get them.
Nah, too late.
We'll hold it down for you. Really? Listen, I brought lemons and limes for the tequila, but also as juju, right? Because this is like the most citrus you'll ever find. It's right here.
There we go.
Right? One could say.
No bloobs for you, Farzad?
No bloobs. No. I feel like every quarter that I've had a blueberry, that stock has gone down after earnings. So I have to figure out like some sort of like thing to try and break this curse, you know?
It's called oranges. Like, it's not that hard, man.
I guess. It's called just do the thing of the thing that's called, right?
Yeah, exactly.
Even when you're doing citrus, you're not doing oranges. It's like you just somebody give them the memo. Just get some oranges, get some mandarins.
I think Farzad needs to just be told what to do, you know?
I know. Yeah. I'm a rule breaker by default. Nick and Matt, are we Ross, welcome, my friend. How you doing, sir?
Ross.
Yeah, sorry. Trading desk isn't closed yet. And
it's all good.
Yeah.
You got a lot going on your end, man. How you feeling, Ross? What are you expecting for this sort of call? I know there's been a lot of. This one seems like one of the tougher ones to extrapolate because of all the different variables that's going on. But what are the things you're going to be looking for?
Variables? I mean, Tesla gives you a lot of information just to start. So they send me 27 analysts, numbers. If you're an analyst on Wall Street and your job is to analyze Tesla's earnings, and that's your whole job. And there are 27 people who make six-figure incomes doing this. And if they're that off, like, boy, Wall Street is really shitty, right? So, they're saying $1 in earnings, and I don't think it's going to be much different. I think, for good or for bad, Tesla's become a company that is extremely well followed, and there's a large amount of data that they put out. So we know how many cars they've sold. And I know the big thing for us is how many Model X and S's they sell, because that's where the margin is. And they sold, several thousand more than last quarter. I think they were at over 18,000 Model S and X's. And that's what really gooses margins for Tesla, is the more X's they sell and S's, the better. So I think I don't see any reason that they would have like a bad number, because we know how many cars they sold, So I think the real question is, how do the numbers look from energy? I think charging is starting to add meaningfully to the business, and you see that in other services. Was profitable last quarter. I think it'll be profitable again this quarter. Well, all of a sudden, services is actually not a money loser for Tesla. So what really matters is what Elon says about what is next for Tesla, and that's what is most important right now. It's about trucks to me. The 2023 is about trucks to me. Okay. So, we haven't heard any news about what's happening in Austin. And what I've heard is that by December, they'll be, pretty much up and ready to have tours and things like that in Austin. But what I'd like to hear is that they're starting production of the Cybertruck, even in small amounts, in the near future, because to me, that's the catalyst that brings Tesla to the next level.
So Ross, can I push back on one thing you said was, there's so much data that Tesla has, and Wall Street analysts are kind of assuming around a dollar. But like Wall Street, if you look at their history of projecting Tesla's earnings, it's pretty bad. 10 of the last 12 quarters, they've undershot Tesla's actual earnings. And they're, assuming a EPS decline relative to Q1, which I think is a potentially suspect assumption. So I don't know. Do you really think there's no potential for a meaningful beat here?
No, I think there is. I don't think what you're saying is wrong at all. What I'm saying is that there are 27 people who are employed to get this right. I don't disagree with what you're saying at all, actually. But I'm not a fan of analysts, actually. And I've gone on record saying the one thing I'm sure about analysts is that they'll get it wrong. But that said, this is the most popular company in the world now. People don't call me about MGM or Apple. Oh, actually, I'm going to be on TV for Apple next week. But in general, everybody calls me about Tesla. Every freaking day, and so everybody wants to know what's next, and that's really what drives the narrative more than earnings. Earnings are going to be like $4 or $4.25 for the year. It doesn't matter. To be honest, it doesn't matter. What matters is next year, and it's around the corner. And what are earnings going to be next year is really the question, not really this quarter. Like Bloomberg has $6 for earnings next year, and I got Gary and other guys saying they're going to be like $8, and that's a vast different result. Vastly different, and would have massive implications to the stock. But even if you figure $6 and you do 50 times earnings, you're at 300. Stock's trading at 220, So 50 times earnings for Tesla seems like really cheap. It's like a one peg in a two peg market. So any way you do the math, if Tesla executes in the next 12 months, the stock will be meaningfully higher. And that's what I think why these quarterly earnings things are almost like a waste of time, because it's such a short-termism viewpoint of Tesla. And I tend to think annually, and so I kind of hate quarterly results, to be honest. It's the stock might be up, the stock might be down, what it's expected, what's not expected. Hopefully they beat expectations. Any way you look at it, they're killing last year's third quarter. And that's the way I look at it. If you look out a year ago to what they're doing today, they're killing it. There's no bad quarter here.
Yeah.
No.
I mean, the fact that they might actually hit their 50% growth rate despite Shanghai being closed for a couple months, upgrading, we're not talking about that enough as a win already, despite anything.
I mean, the toughest operating environment. I mean, look at every other car company. Okay. It's the toughest operating environment for inventory-based manufacturing businesses through China that has probably ever been. And so their management of this has been epic. And I don't really want to give Elon credit for that, because it's not actually Elon. It's all the people who work at Tesla have done an amazing job on supply chain. So here's where your upside surprise comes in, is I think by the end of the quarter, a lot of their costs had actually come down from the beginning of the quarter. And we're seeing this with earnings so far, and I don't want to extrapolate out too far, but I see this in the companies I do business with, that supply chain issues and costs were real bad at the beginning of the quarter, and they've alleviated tremendously today. So nobody's complaining about supply chain or shipping issues anymore. Nobody.
Yeah.
Okay. So what possibly could have happened, because they had raised prices going into the quarter, that their cost of production came down in the quarter and it bumped up margins maybe 1%. And that's where you get your upside surprise, you know?
Yeah. I guess it also depends on what foreign exchange hit they get this quarter. Based
Well,
on...
I was trying to figure that out too. You know, everybody's getting hit on foreign exchange, but like if I make a car in China and I pay the Chinese workers, in a way, it's cheaper to make the car now because they make more cars in China, but then they ship it on a boat to Europe, and then I translate it into dollars for the report, right? Like, so it's messy any way you want to try to figure out FX, but I think this is a net win for a company that buys lots of things that are made internationally, because the dollar's so strong. When they go out to buy stuff in China, when they go out to pay Chinese workers in dollars, they're cheaper now, you know? So this is like a weird byproduct of Fed policy, is like America is the richest country in the world now. By far, our dollar is the strongest currency in the world. We have the best economy in the world. And if you leave America, we're very rich now relative to Europeans, where it was completely opposite 6 years ago, let's say. Where Europeans come to America and they're getting, you know, $1.50 for every euro. Now it's, you know, less than parity, and we can go to Europe and feel like rich people now. You know what I mean? Well, it used to feel poor going to Europe, right? You go to Europe and it's like, damn, it's expensive. So this benefits Tesla because they sell, I think, more cars in the United States than they do internationally. And they manufacture internationally. But I think that evens itself out as they grow.
What are your thoughts on energy? Because that's where I think there could be a big surprise. You know, I mean, nothing like too crazy, but
constrained at the end of the quarter too. I think he mentioned that at some point where he's like, "Oh, I think we have enough cells, and you know, no problem now," and that just goes straight to energy, right? So I think what we learned in Fort Myers and what we've learned recently from the blackmail from Saudi Arabia and Russia over oil, that commodities are, you know, not only weaponized, but, you know, this ability to store energy has become incredibly powerful. And so what we saw from solar powered houses in Fort Myers that had battery systems is that they had no interruption of power. And like, this was a huge plus. And so like battery systems just are the most integral part of moving to a clean energy future. So you have batteries in cars and you have batteries in homes and batteries for utilities. So every extra cell they make, they just can easily make these big batteries. It's not hard for them. And I don't know what margin they make on this stuff, but boy, that business is a forever growth business.
Yeah, I think it was 11% last year or last quarter.
So it's just a cell constraint issue. Like, you know, I don't want to not build cars because I'm building batteries at lower margin. And so if they have extra cells, they're going to make more batteries, and there's your upside there too. There might be an upside on solar as well. You know,
they're starting to get some scale on the energy side of the business too, which is really exciting because like 11% margin last quarter. That's right. But like to Ross's point, like Martin just said that they now are not cell constrained for like the first time ever on the stationary storage side of the business. So if you think of what they can do with that level of efficiency now, so they can take the efficiency that they've proven on the automotive side and say, okay, we're dedicating our own, mega pack factory. We're going to start really producing those things as efficiently as possible. That's something they've never done before. So not only are they
well,
the Saudis.
At least I'm glad he ended up here.
That's what happened when you start talking about oil. They switch off
the brigade's here.
Yeah, you got to watch out.
Are we Marcus close? All right.
Yep.
So we're close.
Are you guys going to say like the numbers?
Yeah, we're gonna do the whole thing. Yeah. So I have the website up here.
Oh, okay. Good.
So once they
post
it, I'm just gonna
Bloomberg radio interview at 1:15. So I'm gonna do it live on the show, but I'm gonna mute my mic so it doesn't interrupt you guys.
Sounds
good.
To do a Bloomberg
I was going to say, we can try to do both at the same time. You can pipe us into the microphone, and we can talk to them.
I'll screw that up. But I just thought it would be annoying to only hear half the interview. So I was just going to mute. But they were like begging.
No, that's
I couldn't say no, it's like Bloomberg.
Yeah, of course.
Yeah,
man. No problem
I
at all.
was like, I'm
do
on
you-
Farzad's show. I can't do you, Bloomberg. Sorry, Mike. You know,
Thanks, bro. See that?
they said, please,
Moving on
please. And I
up.
said, all right, I'll cut in during the show and do your interview. And
No, man.
Just so
We
you know,
appreciate you
Farzad,
taking the time. Yeah.
I ditched Bloomberg to come on your show. So just
Thank
context. Ross, come on.
You know, that means a lot. Oh, by the way, Ross, dude, thank you for. So we had Ross on last time, and your team sent us this awesome shot glass. Thank you very much, Ross. This was very kind, dude. Thank you.
yeah, we made these shot glasses for one day. We'll get a Gordon again out of Tesla, maybe tomorrow, and we can all do shots together. But we made these shot glasses for our Tesla tequila, enjoyment, and we've been sending them out to our friends, our Tesla friends. Investors who are Tesla investors with our firm. So yeah, if you join our firm and you move over your Tesla shares, we send you a shot glass. So, very unlike other firms, but
Well, he's got
like
the
it.
Patron
It
too.
says-
So
yes,
I do. I'm
I think he's-
look at this. I am. God knows what's going to happen here later, so we'll be careful. I'll try to practice
seriously.
some
this
semblance
hasn't
of.
come out yet. It hasn't come out yet, right?
hey, we got Bradford. How's it going, Bradford?
All
You're
right,
on
we
mute
got
though.
Bradford as well.
222.04 closed on Tesla today. Just 1%
Oh,
up
that's a
today.
lucky number. 222 is a lucky number. So let's hope
Ross,
that goes through. Let's hope. I always tell my wife, I go, I hate these days. They're like nerve-wracking days. They're just nerve, and it's like maybe I care too much or something. But it's like, but Tesla,
It's very unique to this
It-
community. Like I feel like there's no other company that really like has this sort of attention brought to it and like sort of the excitement around it. Do you guys have an EPS for this quarter? If you were like, should we do a little bit of a guessing game? Do y'all have an EPS you want to throw out there, and I'll put them down in a Excel?
yeah, you can put down 110 for me. That's 10% above Wall Street.
Is that non-gap?
Okay.
A non-gap, yeah.
I'll throw out 115.
Out there with like 125, 130. That would be big.
Yeah, Matt. I think Matt's over $1.30. Yeah.
All right. Well, I'll be that guy. 155 is what I came out with.
Don't make me nervous,
155.
I don't want to come in
Oh,
at 90 cents now because of you.
Hold on. I think someone's saying that it hit the wire. Hold on one sec.
I don't.
Oh, it's out already.
I guess Ross might see it first because he got Bloomberg probably.
Yashu 115, Ross 110. Matt, what's yours? 132.
132, yeah. And my power just went out, so
That's what happened.
fun.
We'll
yeah.
fix that,
It's-
bro.
It's pretty ironic.
Yeah,
that
Talking
we're
about
talking about.
inflationary stuff.
Yeah,
Yeah, Tesla. Yeah.
that's funny. After hours were pretty much flat on the.
I'm going to
on
be
the
a
trading
chicken. I'm
session.
going to say over 132, under 155.
All right,
That's not a check.
154.
That's quite bullish, Bradford.
We're giving you 154 just because you're so non-committal. There you go.
I'm actively
okay,
refreshing.
so we have them. Okay.
trying to
So
make
we
sure.
we're gonna play a little bit of a guessing game here. So we got Nico at 155. We have Ross at 110, Yashu at 115, Matt at 132, Bradford at 154. I'm at 118.
Okay,
So winner gets they have to get Juju, right? We have Yashu in the house.
that's right.
my
Yeah.
my,
They have to
my
get
method
Juju.
wasn't very scientific. I just at 10% above Wall Street.
And you'll probably be right.
You're probably right. Yeah.
Usually when the
using-
art comes in, that's usually when it gets right.
Oh,
we're-
it's in.
we're-
It's in.
live.
Here it is. Shareholder
live.
deck.
Oh, no.
All right.
What is it?
503 service
Oh, okay.
temporarily unavailable.
All right.
Oh, $5.03, y'all. We did great.
Operating
all right.
cash flow 3.3.
We're ripping.
I cannot see this report.
All
I
right,
guess
I'm
they slow the
still-
internet up here in Canada.
Did you get it, Ross?
I got it.
We're-
Numbers, I don't see it.
Oh,
yet.
105.
105.
DPS.
I see 107.
Not a huge beat.
I see 107.
Ooh.
Oh, no,
my
that's
power came on.
Q2. Wait, no. Q1. No, I take that back. That's not the right number. This says
so 10
62 cents.
Adjusted EPS 105, estimated 101. Tesla sees 50% average annual
no, that's
growth
the wrong
in
one too.
vehicle deliveries.
all right.
Yeah.
Stock's up 2%
Yeah, I got
after
a
hours.
105.
So
I'm sorry. I was looking at the wrong thing. So 105, 95 cents, 3.6 billion profit, which is right in line basically with what I expected. So those are good numbers. Those are solid. No disappointment. Great cash flow. To think that Tesla's doing $3.6 billion in profit in a quarter, that's great. That's great numbers. So yeah, not,
Pretty
as
much
I
in
said, all
line.
these analysts work really hard to get these numbers pretty close, and they were pretty close.
Yeah.
So good
I
job.
take back what I
For this
said.
thing to load
Good job,
here.
Adam Jonas. You got something so close to right.
So non-GAAP came in at 105 versus $1. GAAP came in at 95 cents versus 88 cents estimated. Revenue, slight revenue miss, it seems like,
21.
21.5 billion,
versus 21.88.
but
Estimated.
up 56%.
Yeah. And then auto
Negative
gross
FX,
margin.
though. It has negative FX. Sorry.
Oh, right. And then auto gross margin is 27.9 versus 27.5 estimated. Yeah.
So it sounded like a slight beat on most lines. Okay, here we go.
And we're in the red.
Revenue was a miss. So there was that. But
Down 2%.
yeah, it's pretty
I mean,
much.
this is like not a market mover. It's like
Yeah.
this is in line with that what is expected. So I think it really is going to come down to the conference call as far as any information that's new. As I said about what 23 will bring is really what it's all about. Here's energy storage, guys. Deployments increased 62% in Q3, 2.1 gigawatt hours, the highest level we've ever achieved. Solar
That's good.
deployments up 13%. Revenue and service and other reached all-time high. Paid supercharging
Yeah,
grew more
1.1
than
billion.
3x.
Yeah, pretty much.
Yeah, energy and generation should jump from 866 to 1.1 billion, which is a nice jump.
Free cash
in that
flow came in
segment.
way higher than estimated. 3.3 versus 2.9 was estimated, right? So,
Yeah. And that's big. That's big. And then look at this. We talked about this a second ago. Look at energy deployment. It was huge this quarter. Huge.
Yeah.
Like massively bigger than any other quarter. Like that's important. Like that's real meaningful.
Stock's down 7% after hours on that beat. Interesting.
Go
Once
figure.
again, after
Let's do
hours
it.
right now does not mean a thing until the conference call. So, certainly the 4 people who trade after hours can move the stock.
Yeah. Well,
So
I mean,
on energy.
Okay, so here's what it says, guys. Here's a little thing I just saw. So look at installed annual vehicle capacity. Cybertruck, it says status now tooling. I don't know if it said that before.
No, it didn't. It said in development.
Okay,
Right
tooling, baby. This is what I'm talking about. Sell your Tesla
And-
stock, idiots. Sell it now after hours on an earnings beat and a Cybertruck tooling. So what does
And-
tooling mean?
Tesla Semi says early production.
Early
Oh,
production.
you see it right there.
It's all about trucks, my friends. It's all about trucks. I can't
Well,
wait.
these 2 lines changed from last time.
They did. They changed, right? So
Yep.
early production and tooling. So that means they go into full production of semi and early production of cyber maybe this quarter.
yeah, there was that news out of Fremont today, right? The
What was the news out of Fremont?
on the Cybertruck. Farzad, do you have that? I think Sawyer tweeted it out.
Yeah, apparently
Sure, let me pull it
Fremont is going to be building the battery packs for the Cybertruck.
Really?
Yeah, which
That seems weird.
I didn't know how to read that, but yeah, right here.
I
It was
think I
a
retweeted this.
It was a Tesla Roddy exclusive. Cybertruck battery packs to be built at Fremont factory. On
And
the
then
second floor.
shipped to Texas? Is that what they're thinking? That was
It could-
efficient.
right here.
It could just be like to make extra. Like maybe they're doing that at Austin, but okay, we're done with just testing at Cato, and we'll use that to build battery packs for. I mean, that could be it.
Well, I also think they're having all kinds of battery issues in Texas. That's part of it too, I think. Like the 4680 is probably the thing holding up Texas right now.
I thought
So the one
46
thing in the
Oh, sorry. Go ahead.
sorry, Yashu. On the Outlook page, no, you're good. On the Outlook page, I do notice that they changed up the verbiage a little bit. I just want to read this line. We plan to grow our manufacturing capacity as quickly as possible. Over a multi-year horizon, we expect to achieve 50% average annual growth in vehicle deliveries. The rate of growth will depend on our equipment capacity, factory uptime, operational efficiency, and the capacity and stability of the supply chain. I guess it hasn't really changed too much, but I don't really see any language around hitting their target this year, at least in the deck. I'm sure that's going to be like the target of 50% deliveries this year. So I'm curious to see if that's going to become a topic of discussion on the call.
Honestly, it's I did 45 or I did 50%. It gets kind of old.
What's interesting is I don't see that being contingent on demand. That's kind of like loudly absent.
There's no demand issue. Like where is the demand issue? Have you been to West LA? Literally, I got in my car today, and I think every car I saw on the way to work was a Tesla. There was like no other cars that people own in West Los Angeles. It's just, it's mass adoption. It's mass adoption like the iPhone. And why would you pay $6 for gas? Like, you like giving your money to Russia? So people just vote with their wallets. So if you're going to spend $60,000 on a car, why wouldn't you buy an electric car? So the only people not buying electric cars are the ones that don't have the money, which is reasonable, right? But I came home, my neighbor had a Tesla, said I finally got one. I was like, wow, that's amazing. He's like, yeah, why would I pay for gas? I'm like, I agree.
21.1 billion in cash on hand now as well. So,
Whoa.
Yeah.
With the huge working capital hit from producing way more than they delivered. I mean, imagine if they delivered as many as they produced, they'd have an extra billion probably.
I mean, this has become a cash monster. I mean, look at the cash flow difference, because last quarter they were ramping the factory and they had no production out of it. Now they've got some production out of Berlin, and look at the margins go, and look at the cash flow pickup, right? Like, what is this going to look like next year? And I think earnings estimates are too low. I just think they're too low.
Yeah, it's interesting to see the stock. I mean, again, this is immediately after hours, but one would think that this
discuss after hours trading. It is literally not worth the saliva in your mouth. You know what I mean? It's because literally, like, I could go on right now and just like buy some shares and it'll change it immediately. It's that thin. You know what I mean? And so it's like, there's no conference call yet too. So there's a million factors that'll change before tomorrow morning when trading opens. You know what I mean? But all that really matters is Tesla's doing a great job. That's it. Yeah. And if you want to buy a stock and you want to buy Tesla and you're willing to take the volatility and risk, boy, down here at $200 is like the floor for Tesla. Look at the chart. It's really, it's my favorite stock, obviously.
Yeah, Farzad, the people selling right now are people who bought earlier in the week for earnings run up, and basically have decided to sell it no matter what, as soon as like earnings comes out, or as soon as it goes down for a second. They'll even, I remember July 2020 when they had their fourth quarter in a row of profitability, and people just immediately knee-jerk sold the stock after earnings because they were just playing the few days.
Yeah,
I'm noticing on page 5, they mention a foreign currency impact of $250 million. So that was eating into.
Yeah, I mean that was the number we were looking for. So it was 250 million.
They also say that cost of production ramp at Texas and Berlin and ramp of 4680 were negatives as far as profitability. Yeah. Higher raw material, commodity, logistics, warranty, and expedite costs. I had a high voltage battery replaced this quarter, so I apologize.
That happened a lot. That's actually the weakest link of the Tesla.
Yeah, it's very rare.
They've created their own battery now, I think, to replace the regular ones, because they die. But look at last year. Last year was 62 cents. This year it's $1.05. So you're almost talking about what, 70-80% earnings growth. So, that's Bloomberg. Excuse me.
All right, he's gone on mute.
Yeah,
he's on
adjusted
mute.
EBITDA for the quarter is almost $5 billion.
Just want to make sure he's on.
All right, you turn me off.
I'm on it.
Yeah.
All right, I got him on mute.
Do you guys see energy margins?
I was just looking at that.
I'm just curious how it went from last.
It looks like it's down a little bit just doing the mental math on it. Hang on one second, I can do the.
Yeah, so 1.1.
So it's about 10%. It's like 9.4%.
Yeah.
Damn.
It's a 30% growth quarter over quarter, though. I mean, it is a significant jump, you know? So what I expect to see is into Q4, this number here, the 1117 here, we should see, I think, a similar jump from quarter to quarter from Q2 to Q3 here. So I was expecting to see this number. I think when I sat down and did the model, I had 1039, if I remember correctly. Because that's when Martin comes out and gives the verbiage around, hey, that we have everything that we need. This is the kind of number you would expect to see, you know? What else jumps out to you guys as I don't know if you're reading the report on your side, but what are the things that are jumping out to y'all? I'm reading through it myself, and in the comments too. If you find anything that you think is worth highlighting, let us know.
So days of sale outstanding, it's only 9 days.
What page is that on?
24
towards the front, I think. No, it's never mind.
24 towards the bottom.
Down here.
Yeah.
So less. So there are days of sales outstanding guys gone down.
Yeah, and for that's really surprising for those who maybe are not as familiar with this metric. That's like an accounting metric of how much inventory do you have on hand. And so the big concern with this quarter is, they got all these vehicles on ships heading out of China, and it was sort of implied that because there's not enough demand in China. It's kind of surprising when you look at the actual accounting metrics, which accounts for the growth in the top line, that the growth in the top line actually overrides the growth in the inventory. So your actual days sales outstanding decreased in Q3 relative to Q2, which is kind of nutty. That's actually really surprising to see that metric.
There's another thing, Matt, to draw your attention to accounts payable under current liabilities. That went up quite a bit. Yeah,
up by about 2.5 billion. It looks like 2.6. That's a pretty steep jump. So that actually accounts for the huge increase in free cash flow that we saw, because you've got a big working capital increase. So your accounts receivable is roughly flat. It increased, only 100,000, but your accounts payable increased by a lot. So that means that Tesla has not paid their suppliers by an extra 2.6 billion in Q3. So that's kind of interesting. I'd be curious what the rationale is behind that.
And inventory.
So wouldn't this just be Cybertruck ramping Austin and Berlin and just getting all the supplies in?
Well, so if it's capital equipment, for stamping machines and the IDRA press, that actually goes straight to the balance sheet. So, this is the balance sheet, but it wouldn't go in. It would go into property, plant, and equipment. It would not go into accounts payable. A
lot of it, I think, is from an inventory. Inventory grew by 2.2 billion.
Mm-hmm.
That's on the third line. So Tesla has that negative working capital, that cash conversion cycle where they get to build the cars before they have to pay their suppliers. That's a huge advantage they have.
And this is a really important point. I mean, for most traditional car companies, the cash conversion cycle is more like 90 days. So something like 10x higher than the day sales outstanding that we're showing here. And so in that scenario, you'd have a drastically higher accounts receivable, which to Bradford's point, is a drag on your cash flow. So Tesla has the benefit of negative working capital, and they're growing at this ridiculous rate. And so negative working capital growing at 50% year over year is like a massive cash flow boon. So that's a really, really important point.
Yeah. And I think one thing to highlight here is this is hopefully probably quarter two is worse, of course, but this is probably the tail end of the worst part of Tesla's year, and hopefully years to come. I mean, Shanghai was still tooling in July a little bit. expedite costs, they say in the report, were a little bit higher than expected. FX costs, maybe that come down in the following year or two. Also, I don't think we talked about FSD, but they say at the end of Q3, approximately 160,000 Tesla drivers in North America now have FSD beta.
They did say that in
page 8.
AI Day.
There we go.
Yeah.
Pardon me?
I think we've been at 160 for a little bit now. They talked about that during AI Day, I think is what Matt was saying.
Oh, must have missed it.
Farzad, I think it's worth going to, I think, page 23, just for a second at least, or 21, excuse me, 21.
Actually, before I even do that, if you don't mind, I just want to do something real quick. I'm going to put this up here. Somebody turn this into a meme if you can, please. Thank you. All right, that's it.
That's fine.
All right, page 21, go for it.
Yeah, I just think it's worth looking. I'm curious what everybody thinks about this. Tesla's never, to my knowledge, put something like this in there, talking about smoothing of the wave, the end of quarter waves. So it's just interesting to see this put in here. I'm not really sure what they want us to take away from it. I mean, we can see what the ideal state would be, and underutilized versus overutilized. But other than that, I'm not really sure what they want us to take away from this. Other than, yeah, obviously you'd want to be being as efficient as you can be. Maybe it's just to let us know there's still a long way to go.
I think what they're doing here, I think they're just showing the previous, how it usually works and the quarters. And I don't know. I mean, this theoretically can get fixed in a quarter though, because all you need is a one-time adjustment to take this crazy spike or this crazy trough, and you just have to decide which one am I going to compensate for. And it's much easier, I think, to take this and just delay the delivery so they can fit this line, and then just fix your match your production to this line. And then from this point forward, it's a one-time change. I don't think this takes multiple quarters, honestly. But I think this takes one, maybe two.
Do you not see the left as a potential where we were, and see how sharp that top is, and the right is them attempting to smooth it out?
I think the right is showing where they've been. So they're low in transit at the end of quarters historically, and so they're saying, okay, well, we're gonna look to even out the costs and even out the number of vehicles in transit.
Even this,
I think this is a major topic of the call. Hopefully, I think it's great that I feel like Martin Vieca and the folks on the investor relations team put this in here so we can understand this better. They also mentioned it in the beginning of their letter, talking about reducing the costs and increasing margins by reducing these logistics costs. So I'm also very excited they included this so people can see the problem that Tesla's dealing with. Yeah, the reason Elon's on the call.
It is such a champagne problem to talk about, right? Like there's so much demand that, so although I think operating margin may have been a record despite FX and all the headwinds there too. I think it came in just over 17%. And also regulatory credits were the lowest it's been in about a year, 286 million only on the quarter.
Yeah.
It was the second highest it's ever been for Tesla, and which is the second highest it's ever been for any automaker, because I think the highest it's ever been for any automaker is 14.5% without some kind of one-off thing. Like Ford had this one-time gain on Rivian before they had one-time drops in Rivian.
Yeah.
Are you all at all surprised that the margin number is not higher than 27.9? How do you guys think about that?
All right, that was fun.
I'm surprised by it. I don't think Matt is. I think you were right at 28%, right, Matt?
No, I'm really surprised. I had that a lot higher actually. So It looks like in looking at the actual top line, the automotive revenues of 18.7 billion, that's a lot lower than I was expecting. So it seems to me that there's the kind of price increases that a lot of people were thinking came through probably did not come through. So I'm kind of confused by that, honestly. It seems like most of the issue is on that, automotive revenue kind of top line figure. So I want to dig into that a little bit more.
I mean, it does make sense, though. I mean, if Tesla was materially over 30% gross margin ex ZEV credits, then they probably don't change their delivery strategy very much. But I think they changed their delivery strategy to negate some of the extra expedite costs that they must have had. Right. So I think that was kind of a signal already that it wasn't going to be like record gross margin.
Well, I think they also did that to save margin too. It's
right.
like
that's what.
It's like, oh, we'll get your 20,000 cars delivered, but it's going to cost you, an extra $2,000 a car. And he's like, forget it. That makes sense. I just got off Bloomberg and, they were talking about all these little minutia things like, oh, they missed here and they missed this little thing by 0.1. And they, and I said, but nobody's talking about free cash flow. It's like the thing that matters is how much cash your business actually made. And Tesla killed it this quarter in cash flow. It's like amazing how much it was like $2.5 billion fell to the bottom line.
Mm-hmm. Yeah. So Ross, while you were off, we noticed there was a huge spike in accounts payable, actually, which seems to account for almost that whole amount, 2.6 billion. So that's one thing we'd like to get a little bit more clarity on. It seems like there's just, kind of delaying payments to suppliers, or maybe it's just normal course of business, but a definite big spike there, which is driving the free cash flow. Yeah.
Well, that would explain some of the free cash flow, but that could also have to do with ramp and scale too.
Yeah, in cars in transit and growing inventory for sure.
Yeah,
their inventory grew by 2.2 billion.
Yeah, you see it. Cars went from 4 days of sales to 8 days of sales. So inventory grew, which is normal for a company that's growing so fast. But I also think is interesting is looking at margins, how like when you look at automotive gross margin and then you look at total revenues and gross profit and then operating expense and then getting to operating margin, you go from negative comparisons to positive. And it's like their income from operations went up, substantially from this. So it's like they're getting some sort of efficiency somewhere by maybe cutting costs.
I want to come back to a point that Ross made earlier is staying on this page. Here we have the earnings, net income attributable to common stockholders GAAP up 103% year over year. Non-GAAP up 75%. There's no other company that's executing to this level. And I think it's important that people look at the progress they're making versus looking at it versus quarterly expectations, that kind of thing. And I'm hopeful that we get some more color on the call. I don't think they'll tell us, but it'd be really nice to know how much money are they going to save per car by switching to this new delivery schedule with their exports. I don't
Do you
think
have an estimate for how much?
Go ahead.
Yeah, I'm curious to see how much it would like in the cogs of the car. How much of it is transportation? My gut tells me it's like $500, $600 per car.
It's probably
maybe more, but
I think it's like 1,000.
Like $1,000.
Yeah, because like when you buy a car, they usually tack on $1,000 like vehicle destination charge.
Mm-hmm.
I think that would be high.
And I wonder if it's getting on a boat.
Yeah.
I don't think that's high. I mean, it's expensive to move cars. They're heavy.
I haven't done all the math on it yet. Go ahead.
Yeah, I'm just wondering how much of a savings you can get. So if an expedited cost for the end of the quarter is like, say conservatively, a third of your fleet is undergoing, say, a 50 or 100% increase in transportation. In the best case, you can save like $250 per car. right? So $250 in margin is like help me out, somebody, like a point, not even half a point or something. So I just don't know how much of a. I mean, I guess it's kind of significant. If they do, what's 250?
Well, it's 20,000 cars that they didn't want to overpay for.
Or 5 million.
So it's money, but I wouldn't overthink that either.
Yeah. Yeah, it's like half a point of margin.
There's not much more to this report to analyze. I mean, it's just a good report, and we got to hear what Elon has to say. I think what I said on Bloomberg just now, I think the coolest thing of the report was seeing Cybertruck and tooling. Like if semi and Cybertruck production is on the verge of starting, this is a massive catalyst in a positive way.
The one thing I would say that stuck out to me is based on seeing like everybody doing their models and everything. If you look at the average selling price, it looks like that came down from last quarter.
Yeah,
I don't know how many people expected that, but yeah.
So Munster was saying like, oh, maybe they had lower prices. And then I brought up that I think they sold fleet sales to Hertz, and they sell the low end Model Y or 3 to Hertz. So I think they're selling $50,000 cars to Hertz, stripped down Model 3s. And they definitely did fleet sales this quarter. So that might be the reason. That's a good question for the Q&A.
Yeah. If you guys look at it, like Q2, I think came out to 57,000, 58,000 maybe. And then Q3 essentially reverts back to what Q1 was, almost identical to about 54,300.
Yeah, I would bet that there's just a different mix of vehicle sales. Because prices went up in the quarter. Prices went up on the Model Y.
Yeah, I mean,
yeah, but it's still. I feel like the mix would have been this. Wouldn't they be shipping more like X and Ys though in this quarter?
Yeah,
there was
more,
a lot of,
but I mean, it's more Model 3s and Ys. But like, if they sold more, they just say Model 3. They don't say which version of the Model 3. You know what I mean?
And I know there were some Model X's in particular this quarter that were delivered that had the price from like a year and a half ago. So Emmett, for example, got one of those delivered this quarter, and it was like $25,000 cheaper than the current version. So it may be that a lot of these old order book, orders, that they avoided in Q2, they just decided to deliver them in Q3. So that may have had a bigger impact than we were thinking.
Yeah, that's very possible. That's a possible.
Yeah.
But once again,
so I did
talking about, sort of like, figuring out, this little things. That said, I'm excited. I mean, when you're growing earnings by 70%, in this world, it's pretty good. It's pretty good.
Hey, Farzad, you do need to adjust the ASP for the leasing. So it is a little complicated.
Okay.
So it's probably too
I have to back out the leasing
for us to get into.
Okay.
But we see the total deliveries up 42% year over year, and profits up 75%. It just speaks to the leverage that Tesla has that we all of us understand. But I think the investing public really doesn't understand that.
Mm-hmm.
I am curious, Ross,
the stocks
about Cybertruck. So, like for me, I continue to look at, as long as Tesla can grow unit volume 50% year over year, I don't care about the mix so much. I'm curious to hear why you think this, and I love the Cybertruck. I'm really stoked for it to coming out. But as an investor, let's say, why do we care so much about the Cybertruck if unit volume is all that really drives the bottom line?
I like that question. In theory, you're right. All that matters is how many vehicles we sell every year, right? But that's not what drives stock prices. Stock prices, it's like Boeing sells a lot of planes every year, but everybody hates the 737 MAX, right? And so it's like Boeing might get their production back on track, but it's like people aren't excited about this great new plane, right? And so what gets people to buy a stock is when people get excited about the future of this company's prospects, and there has to be something that creates that excitement. And, going back to Apple and Steve Jobs, it's the only similarity to Tesla and Elon. And so if I don't have new products it just becomes a stale story to Wall Street after a while. It's just less exciting. So when I have new products and new growth opportunities and new verticals, it just gets investors excited about what the future is for the company, even if the future is just as bright selling Model Ys, you know. But so perception is reality in life. And so if the perception is this great new business is starting and this is the most impactful, different vehicle, like I want a Cybertruck so bad. And I know when I drive down the street in a Cybertruck that everybody will be like, holy crap. And that's a powerful thing. And that's what drives stock prices as much as earnings does. It's people's perception of the future. And that's where Cybertruck is so important.
That's fair. Yeah, I mean, it makes sense. But I guess that shows you investing isn't totally rational at the end of the day, right? But, but I mean,
told you it was rational.
Perfect
you
market
believe
theory.
that book, A Random Walk Down Wall Street? What was it? The efficient market theory?
Yeah.
You tell me how efficient the damn markets are. It's like the inefficient market theory. So yes, I've made a lot of money over the years of the fact that markets are not efficient, and they're certainly not correct about stocks like Tesla, and that's the opportunity.
Yeah, I mean, it does open up a new pool of investors or people that today might scoff at a Tesla. Now, when the Cybertruck's out, now all of a sudden they're going to want to test drive, even though they've hated on Tesla for years.
I think it'll be the most impactful thing on the road in every town that you drop a Cybertruck.
Yeah.
Okay.
Yeah, I agree.
I literally will trade my Plaid in a second for the Cybertruck.
That's fair.
Yeah.
And I love my Plaid. It's no lack of love, but I cannot. My kids are just going to be like, my dad is the coolest dad on earth. When I roll down the street in this, I'm going to get the first one. Okay, I'm going to get the first one. And I'm telling you, I'm going to be the coolest guy in the Palisades. And that is a tough bar. Okay, everybody's got a cool Tesla in the Palisades. So,
I want to
also
read a quick line.
Yeah, go ahead.
Sorry, Nico. Let me, just on page 3, just want to read this out for folks that are in spaces, just because I feel like this is one of those lines that sort of caught my eye, which again sort of reaffirms the story here. We remain focused on increasing the vehicle production as quickly as possible by increasing our weekly build rate in Fremont and Shanghai, and progressing steadily through the production ramps in Berlin and Texas. Logistics volatility and supply chain bottlenecks remain immediate challenges, although improving. We continue to believe that battery supply chain constraints will be the main limiting factor to EV market growth in the medium to long terms. Despite these challenges, we expect to continue to deliver every vehicle produced while maintaining strong operating margins. So it caught my eye in the report. I just wanted to make sure I threw it out there. I don't know if you all have any thoughts on that, but I think we loosely talked about it before.
Yeah, I would just say hopefully they say this on the earnings call, because that's what everybody wants to hear. They want to hear that they're going to continue 50% year over year. They want to hear they're going to deliver every vehicle they make and essentially get rid of this whole, once again, China demand issue, right? This is like the third time this happened where China has a demand issue, supposedly.
Well, China's in a recession. To be fair, China's in a recession, and they do have that as a real factor for sales in China. But, you know, Gary and I did this whole thing, I think on your show, right? Where he's like, oh, you know, they must have not sold 20,000 cars in China, and then they had to like ship them. And then they come out with China numbers, and the China numbers were great. There was no issue with the China numbers. And then Gary's like, oh, you know, and you know, I get where he's coming from, but that wasn't what the data showed. And so the question is, do Chinese consumers, even in a recession, buy EVs versus regular cars? And I think that that's the case. And I think if they don't sell the car in China, they put it on a boat and they sell it in Europe, no problem. So China's market for cars is twice as big as the United States. So even in a recession, they should be able to fill the supply. But they are producing and selling in China, you know, a substantial amount of cars. Oh, there's Gary. Okay, there's Gary.
We got Gary in the house. We mentioned you the first time, Gary. You just showed up.
I know, because we were talking about it. That's what happens. Talk about Gary.
What are you thinking, Gary?
Up. Well, they missed, obviously. You know, the earnings were a beat by a couple cents. They missed versus my $1.09, and I know I was low versus most of you guys. They missed on auto gross margin, which came in at 26.8 versus 27.7. That was the street. They missed on revenues. They didn't talk to fourth quarter deliveries, but they said very wishy-washy 50% deliveries over the next couple of years, which is what they've always said. But the problem is the beat is a low quality beat. If you look at the tax rate, it was 8.3. I had 15. I think the street probably had 15. And they held SG&A flat. And I had about a 25% increase. So everybody's going to look at it and say is, yeah, they beat, but it was a low quality beat. And they missed on the most important metric, which was auto gross margin. And, what we don't know is, when they missed on the volumes a couple weeks ago by, what is it called, 18 or so, maybe it's reverse operating leverage that they just didn't, they didn't get the auto gross margin that they thought they were going to get. So I think the market has taken the stock down about, 5%. That feels about right to me. It may fall more if they do a lousy job on the conference call. They got to let people know what happened with deliveries in the third quarter. So specifically what happened in China, why the order book, went to zero. They've got to talk about fourth quarter volumes and how they're going to navigate the EV credit going in place on January 1st. And they got to talk about this delivery wave, which we were looking at this picture on page 21 that's in the deck. And my partner said, "What did Elon's son draw this picture or what? It looks kind of goofy." So I can't be positive. It's not a good quarter. I don't care what anybody says. It's a low quality beat, and they missed on the most important metric, which was auto gross margin ex reg credits.
Gary, your camera's shaking. Are you having an earthquake over there? It's like
yeah. Sorry, I'm on my phone. I'm on my phone.
Okay, gotcha. Any thoughts on what Gary just shared with us? Anybody have any sort of thoughts? Anything they want to share?
Yeah, one thing on auto gross margin is I calculated that if you back out the foreign currency hit of 250 million, then auto gross margin would have been about 29.2%.
Yeah, did you factor that in, Gary, the FX?
Yeah, but everybody factors that in. That's not, they still missed versus expectations. And we didn't have 250, but, they missed. They missed versus Wall Street. And Wall Street does, put in some FX currency. It's about half, U.S., half non-U.S. So I don't think you're not going to get a buy because of that. That's what you're suggesting.
Yeah, I actually agree with Gary. It does seem like a low quality beat to me. And I was assuming 230 on the FX hit this quarter. Came in pretty much right there at 250, and still auto gross margin was way lower. So the ASP seems like the biggest issue to me. The price increases just weren't there. Margins on the energy side of the business didn't improve. Margins on the services side didn't really improve. I was expecting a lot of kind of improvements quarter over quarter that didn't really materialize. That's I think there's reason to be excited long term, like Ross was talking about. But I think in terms of Q3, not at all where I was kind of thinking and hoping it would be.
Yeah, but I still think it goes back to the fact that everybody's pretending like we're operating in some sort of like normal environment. Like you've got to factor in the ridiculousness of just even trying to do business in China right now, and the fact that they've got these factories in full bore in China. And every day I'm worried that China's going to shut something else down or this or that. And then just getting commodities and auto gross margins are certainly going to be impacted by the different challenges that everybody's facing in supply chain and everything else. And that's where I think, Wall Street tend to, sort of set this bar, but nobody on Wall Street ever built a damn EV. So they have no idea the challenges that they're going through. So they go, they missed on this and they missed on that. I'm like, you get in the goddamn factory and build one of these cars yourself. They didn't miss anything. Okay. It's amazing what they've done. And that's what I think where Wall Street expectations are very misleading for investors, because these are expectations, but they're not realities. And if people's expectations are wrong, maybe the people making the expectation is the problem, not necessarily the company. And so I think as a business owner, this is one of the most challenging years I have ever faced. Okay. And I've talked to people at every company, different types of companies. It is one of the most challenging years businesses have faced in as long as I can remember, since basically COVID. And well, that was recent, I guess. But it's more challenging coming out of COVID than it was going into COVID, I guess. I don't know.
Ross, your whole however long you've been talking, 2 or 3 minutes. You didn't give a single number, and Wall Street's driven by numbers.
That's right.
You can poo-poo it all you want. It's not qualitative gibberish on Wall Street. They're going to look at the numbers and they're going to say 26.8. The street was looking for 27.7, and they missed. And,
right.
No,
and you were looking for $1.09, and I was hoping for
ignore that. It's
a $1.05.
40 multiple stock, and you missed. You're going to pay the penalty. So you can wave your head and say, well, Wall Street doesn't know how to build a car. That's true, but it's based on math. It's based on numbers. And if you miss your numbers as a high PE growth stock, the market's going to punish you.
Have a PEG ratio of 0.5. You think that number's correct?
I don't think it's correct. I'm a long-term
right.
bull,
but so what numbers missed?
Don't be delusional. Don't say it's a good quarter if it's not a good quarter. That's all I'm saying. It's not a
bad quarter. It's a fine.
It's an average.
Earnings were up 70%.
I'm saying relative to expectations, just like the deliveries a couple weeks ago. But
it's like being married. It's like being married. I'm never going to reach my wife's expectations, Gary. Come on.
Well, then you married the wrong woman.
Live based on my wife's expectations. If that's not going to Wall Street's expectations, you're never going to be happy. That's why you guys are never happy. You're never going to be happy. I say, I'm twice as good as I was last year. I'm twice as good. I thought you're going to be 1.5 times better.
Expectations, less performance. So you must not be performing.
Listen, babe, I got 2 kids. All right.
I have 3. I have 3, boy.
I've never seen your kids, Gary. I got pictures.
Matt's got like 6.
Yeah, I've got 6. I'm performing, I'll tell you.
You're performing. So
I know you can perform, Gary. I know you can.
We bulls have a tendency to, gloss over the weaknesses, and I just think that's a bad thing. You have to be realistic. And I've never seen a bullish community that doesn't open up to the weaknesses. This was not a good quarter. And what Elon and Zach have to do is explain it on the call. If they can explain it and say, look, this is temporary because of X, Y, Z, as you pointed out, then everything's good. But, they can't just gloss over and say, oh, it was a great quarter.
I agree with that. I agree with that. But that's why we hang out with you, Gary. I mean, we need somebody to bring us back to reality. I mean, come on.
There's 7 of us on this call.
Gary.
It was 6 bulls until you came on.
Gary.
So our largest position, Ross, just like you.
Tell me about it.
So it's your largest position. You don't think it was a good beat. You think it was a soft beat.
Low quality.
What low quality? After looking through the report, what positive did you take out of it, if any?
It's a good question. They had a good number overall, I guess. They were up, but I don't know. It's hard for me to find the positive relative to expectations. I mean, they beat the bottom line number. Again, they did $1.05. The street was at $1.02, and we had, in our community, we had people in the $1.20, $1.30 range, which was crazy in hindsight. But $1.02 or $1.05 was okay, I guess, versus the $1.02. But it's nothing to write home about, that's what the market's telling you.
But I don't think it was going to be a write home about a quarter either. But what I'm saying is I was worried that they were going to do 95 cents. Okay. I was worried they weren't even going to beat because of the issues you've brought up. So that's why I'm excited, because my expectations, I guess, was worse than Wall Street.
Yeah.
So maybe my expectations were worse, and that's why I'm happy, where Wall Street expectations were absurdly positive or something. I don't know. That's so I was worried they were going to miss.
Yeah. Look, the one good thing is expectations were so bad after they missed on deliveries on October 2nd. So this was, this stock's down 30% in about 3 weeks. So the question I keep getting is it already baked in, or the bad numbers baked into the stock? We'll see tomorrow. As you said before, I think I heard you say, Ross, after hours, it doesn't always tell you anything. But I want to see what they say on the conference call about fourth quarter deliveries. Right. I want to hear what they say about what happened in China in the third quarter. And I want to hear about this delivery wave smoothing that they're attempting to do. And that'll tell you what the stock's going to do tomorrow if they can be confident and transparent. I just don't know if they will, because sometimes they obfuscate things, as you know.
Well, Elon's watching this call right now. So
hi, Elon. Hope you're good.
Hi,
Elon. Hi. You did a great job, even though Gary's expectations were higher than mine.
My expectations were pretty low, guys. I looked at that chart you guys send around. I was at $1.09. That was pretty low. They missed.
Well, I was
they
at
missed
$1.10,
mine.
so you were lower than me.
There you go. So anyway, I hope the
Yeah.
call is good. I hope.
But what
they deal
about this, Gary? I think there are positives in this, like energy storage. And what's your take on the massive growth in energy storage?
That's good, but it's so small. It's not a big number. It's a tiny, tiny
on an
number.
absolute basis, like for driving Tesla's business?
It's good that it grew so much. I'm just saying, relative to the EV business, which is what drives this, it's so
Right.
tiny.
Yeah.
It's my worry that we're always getting caught up in these little things. And look, there's nothing wrong with the energy business. It's a good business, but it's small relative to the EV business.
That's legit.
Was it?
It's
Was
small
anything
relative to
surprising?
regulatory credits, which is kind of
Yeah.
crazy. Like the gross margins, like 100 million, regulatory credits are over 200. So like it's exciting long term if you're willing to hold the stock for 10 years. But if for this quarter, Gary's right, it's like irrelevant. And the margins actually decreased quarter over quarter, which is a little disappointing considering Martin's comments about not being cell constrained anymore.
Maybe that's a positive, is regulatory credits weren't that much of a help. Also,
Yeah.
I noticed there's no kind of recognition of deferred revenue on FSD. It doesn't appear that there is a big uptake in people buying the enhanced autopilot that's now available at $6,000 a car now. So yeah, when I first saw the number, I was definitely disappointed. You probably see it on the replay. I didn't quite throw up in my mouth a little bit, but I think we all like to see things continually advancing. Many of us are entrepreneurs. I share Ross's frustrations with the year. A lot of business owners are having to pay people a lot more, and in some cases their revenues may be down. Maybe it's down because of the market, like the business Ross and I are in, but it's also down because they're not getting parts, they're not being able to deliver goods, things like that. So yeah, it's been a tough year for some business owners for sure.
I mean, truthfully, we've had actually a really good year as far our inflows have not changed at my firm. The challenging part has just been the market part of what we do. But everybody still has a job in America, and certainly we haven't really seen weakening in the job market, but I think where it's been challenging is like everything is hard to do now, and it's like, and I'm not even in a product business, but my wife's in a product business, and the machinations that company has to do to get stuff from China to here and then get things through the supply chains inside the United States, it's incredibly challenging. And that's just the point I'm trying to make. Like, we can all set standards in a normal environment and say, yeah, it was a disappointing quarter. But when you put the context of what is happening, it's like, it was actually a really good quarter. Like, once again, my fear was that these things would actually hurt Tesla. They would miss the dollar. Okay. And they'd be at 95 cents and we legitimately be down 5-10%, and that's life, right? This is a tough operating environment. But what I think we ended up seeing is that Tesla can operate in a very difficult environment, still grow their businesses. Maybe it's not the ideal earnings number, but imagine what will happen when it's a little bit easier, like this quarter. So maybe this quarter they do over 400,000 cars. Okay. But market investing isn't about last 3 months. It's about the next year, 2 years. And the market really cares about the next 6 months. And so I think that's really where, when I look at a quarter like this, it's over. And I'm looking out into Q4 now. And I think Gary's point is one that I am really curious about is how regulatory credits are going to affect Q4 sales, whether people have this perception that they'll get a credit buying a Tesla and then wait till January, let's say, to buy their Tesla or take delivery of the Tesla. And we had that when the credits were originally around too. But I don't think Tesla qualifies for the regulatory credits right off the bat. Where are you with this, Gary?
Yeah, I just had a conversation with a guy today, and he was asking me if they should give up their deposit and get back in line. And then I said, and this guy, he's in our business, Ross. And I said, don't you make at least 300 grand combined with your wife? He says, yeah. I said, you can't get the red credit anyway.
You're not going to get it anyways, right?
And I think that's true of a lot of Tesla owners, that, a lot of them are higher income people. So I don't know if it affects people as much as people think. At least when you think about the average Tesla owner, they may make a lot of money.
Well, yeah, I mean, it's a $60,000 car and you got to pay rent and mortgage, right? So it's like, it's $1,000 payment. Thanks to the Fed, it's probably a $1,300 payment. And so it's like, you think about who can afford a Tesla, they're not getting the credit in a lot of cases. On the other side of the coin, perception is reality, and whether people realize, they qualify or not, it might change behavior. But my perception right now is that nobody knows who qualifies. And I don't think anybody's going to qualify right off the bat in January unless the Fed comes out. I think it's the Fed or whoever makes the rules comes out and says it's real broad, and I'm not sure if that's going to happen. So I think there's going to be a lot of confusion in the market, and people want to buy Tesla are just going to buy a Tesla.
Yeah. And I said to this guy, I said, did they offer you anything? Did they offer you free supercharging? Did they offer you free FSD? And so he got off the phone, called him back, and no, they're not offering him anything to take delivery. That surprised me.
Negotiate with Tesla.
But it's not a good sign. I mean, that shows you that they're really not lacking for demand then.
Yeah, I guess. I hope so.
No, I get emails from people who think I can help them get their car all the time. Like people's like, can you do something? And I go, I don't work at Tesla. Like I don't I'm going to call Martin and be like, Martin, so-and-so can't get his Model S. Can you hurry up? But people show me on their phones like, oh, we've moved up, any day now, there are lots of people waiting for Teslas right now who are just still waiting. And you can see that if you just go online, try to buy a Tesla right now. When are you going to get delivery?
Right. Why do you guys think there was no buyback announced? I mean, they generated another 3.3 billion of cash. So now, their cash is up to 21 billion. They have no debt.
They're going to announce new gigafactories.
They're what?
They're going to announce new gigafactories.
I know, but this is after gigafactories. I'm saying the free cash flow after all gigafactories was 3.3. They have 21 billion of cash. Like what? We didn't see any. I mean, I didn't expect it per se. I thought it was.
I mean, I just don't know why everybody's caught up on a buyback that really isn't that material relative to an $800 billion company.
Could it not be on the earnings report on the 10Q and just not be in the shareholders deck here? Because remember when they bought Bitcoin, that wasn't that.
Yeah,
also
he might just announce it. He might just announce it.
Yeah, because I think when they had bought Bitcoin in 2021 or whatever, it wasn't announced on the call. It wasn't the shareholders deck, and then the 10K I think came out and it was in that report, and they had bought it like 3 weeks prior to that. So
I'm back.
Gary, I'm going to get you a real camera for.
This is a phone. I wasn't even going to be on this part of the business, but I just said I got to get on because you guys are too bullish.
Gary,
you're supposed to be
it looks like we're tracking like the second stage of the Falcon 1, that third launch where it was like getting out of orbit and like breaking up and losing the connection.
He's like the new Dennis Tito. He's like flying around the moon right now.
Hey Farzad,
I think the big disconnect between Gary and the other bulls is like Gary's a very cognizant of what can drive the price in the short term, and I think where many other bulls are looking out as 5-10 years,
or even a year.
I guess my question is there anything in this report, and maybe we wait for the call, that changes how we look at the business 5 years out?
Doubt it.
I don't feel like there is.
No.
Yeah, I don't think so. But I am curious.
We delete Gary so we don't get a negative comment.
I guess so where's the extra capacity, the majority of it in Q4 coming from? Where are we expecting it to hit from the 495, whatever Reuters report, which is kind of crazy talk, to like more of the 450-ish range? Where is that extra delta coming from in terms of factory production this quarter?
Well, they get the full production out of China for the quarter.
Sorry?
They'll have full production of the scaled up China for the quarter, and then they got Berlin numbers.
Yeah, so Berlin's at 2K a week ish, and then
they hit that. It's not sure it's sustainable, but yeah, that'll have Austin's
and they might be growing that. Like as I remember from Model 3 ramp, it was a pretty steady S curve up. It wasn't really junky, So my assumption is they they hit it for like 1 week and they announce it, and then they got to fight to keep that production. But I think the next announcement is 3,000, and then 4,000, and then 5,000. But they're good at scaling Model Y at this point, and this is Germany, so these people know how to build stuff. So I assume you're going to get some production out of Berlin.
Mm-hmm.
So just a potential hiccup to that. Farzad, can you share the deck again and go to page 8?
Yes, sir.
It's a picture of Berlin on fire.
So if you zoom in and just read the very last line on page 8, this may produce some downtime or something with Berlin, but it's also kind of exciting. So it says, we plan to introduce front castings and structural battery packs at Gigafactory Berlin before the end of this year. So I don't know what the state of that is, but obviously we all know they haven't been doing that. So I don't know if that'll create some downtime, how that could change numbers. I mean, there's a lot there.
Are they building batteries in Berlin and the whole thing in Berlin, or are they shipping batteries from China? Because I don't know if they're building all the batteries in Berlin.
I think they will be eventually, but I think they're shipping in 2170s.
That's what I think too. Because I don't think Berlin is building everything from battery to car. I think they
not yet.
No.
Yeah, right. So it won't really affect production.
Well, they're not doing structural packs right now at Berlin.
I mean, I don't think they're doing structural packs anywhere in any scale, right?
No, but my point here is that they're saying they're going to be doing it. So I mean, there's one line, right? So,
yeah, but they're saying on the batteries that they're going to be building, the structural pack from the batteries. And so what it sounds like is they're spending a lot of time building this battery line in Berlin. Because remember, they were saying that they weren't going to build the batteries in Berlin because, you won't get the EV tax credit. And then that would turn out to be false information. And Elon's like, no, we're building batteries in Berlin. And so my guess is that they're shipping packs from China, or from third parties. I don't know.
This suggests 4680.
Yes, exactly.
So there was a rumor I heard earlier in the year that in Berlin they had 2 lines. That each line was capable of about 250, and that one was 4680, one was 2170. So it sounds to me like if that's true, Tesla is scaling up to 2170, and that maybe possibly this note at the end, that last sentence is saying, okay, we're going to start that other line and start to get things dialed in or resume that work.
Yeah, you just brought up the biggest question in Austin too, which was I think it was this year. I was really, when I went out to Austin, I said, well, what are you guys going to do? Are you putting 2170 lines next to 4680? Because you can't really rely on ramping 4680, right? And I couldn't get a straight answer from anybody. So I was trying to figure this out because it didn't make sense to build 2 lines next to each other, And then I was kind of told, no, we're going straight to 4680. And then that didn't work. And so what I think's happened in Austin is they've had to put in a 2170 line in Austin too. And then maybe that's what they're doing in Berlin too, where they have 2 lines basically, which originally they said they weren't going to do, which is definitely something that could eat up a little bit of margin, but what I suspect, and what would be my question on the conference call, is where are we at with the scaling of the 4680 cell? Because one of the things Elon taught me in my experiences with Tesla is that we can build something in small batches, like that works amazing. But when you go to mass scale, it doesn't just exponentially work that way and maintain quality. And that's where most of the EV companies struggle, because like Fisker built 90 cars and they're like, yeah, we built 90 cars with Magna. We're ready to go. And I'm like, dude, try building 9,000, then let's talk, and then build 90,000. And it just doesn't scale exponentially. There's just different challenges, right? And so I think Tesla got themselves into a hole with these 2 factories. Elon does this every time too. He did this in Fremont with the robots with Model 3, where his technology goals are ahead of what's scalable. And then they have to revamp everything. And it costs money. And I think that's exactly what's going on right now. And now they're going to just build GA lines with 2170 cells in both locations and really get production going because it's just stupid. And then they're going to work on this 4680 stuff until they can get it right. That's what I think's going on. And that's based off no actual knowledge of somebody telling me. That's just through my questions and answers and what I deduce is happening. Because we're not seeing them brag about Austin hitting 2,000 cars a week, right?
Yeah. I actually question if there is any real issue with the 4680. I know we've seen all the reports and all that stuff, but we haven't heard anything from Tesla. And the fact they pivoted to the Semi, obviously Semi's using 4680 battery. The fact that they've got Cybertruck tooling, that's obviously going to start early next year. And then you add into that what we see here about Giga Berlin with 4680. I don't know. Maybe it's a lot of fun.
Maybe they solved it.
Farzad, if you pull up the shareholder deck on page 7, where I think you were, it reads like the 4680s are actually happening and they're going in the Semi. I know there's some debate.
Where do you see that?
If you look at page 7 and just read under the US, Texas, California, Nevada paragraph, and just specifically this part where it says the total number of 4680 cells produced, cells sent to formation, increased 3 times sequentially in Q3. The initial phase of Tesla Semi deliveries is scheduled to break. Like, just putting that.
I see what you're saying.
It just reads like, okay, it's 4680 going to the Semi, and there's not 2170s. Like, people are kind of rumored.
Well, maybe they're just building them now for the semis,
which would make sense.
Yeah. The problem. Pepsi I think the only customer.
I watch all of you guys too much. It might have been Emmett, might have been Yashu, might have been Farzad. I don't know who someone's video, they were talking about how maybe Tesla is intentionally doing this, using up as much 2170s they can, stockpiling their 4680s, getting Semi out. Why not? We can do 2170s and all the other vehicles. Like, it kind of makes it's efficient.
He's going to come back if you keep this optimistic. He's going to come back in and spit on you. He's going to say, "What is wrong with you, Nicholas?" Are like
the bull fairy.
I'm newly married. What do you expect? I don't.
Welcome to the club, my man. Try to beat that.
Time to perform.
Gary's divorced. He doesn't want to talk about it.
I'm still happy.
Well, you just got married. I'm on 10+ years, my friend. So I got to make expectations every night. You know what I mean?
Back to this, Alexandra.
Interesting the way Wall Street looks at companies versus the way I look at companies. And that's why I love working with Gary, because I'm not scared of Gary saying, "Ross, you're wrong. Here are the numbers. Here's the way I analyze it." I appreciate that, because it's like, it's not really about like who's right or wrong. I want as much information as possible. I really respect his opinions and his analysis, which is why I work with Gary, because I think he's a really smart guy. So that said, I think it's really helpful to have that. That's why I like working with Gary. But it doesn't temper my analysis of if your earnings are up 70%, they're up 70%.
Yeah.
So you can argue about this little number, that little number, whatever. The way I look at it is if I had, I made 65 cents, now I made $1.05. That's pretty good.
Yeah.
So I was digging into the free cash flow numbers a little bit. Farzad, maybe if you want to pull up page 25 of the deck again.
See, I like this analysis. Sure. You guys are doing a great job getting, really into this thing.
I'm a numbers nerd. If you look at the purchases of marketable securities, they really ramped that up this quarter. So $991 million, almost $1 billion that they purchased in marketable securities. And if you look in the previous,
sorry, Matt. So for those of us that don't know what that means, what does that mean?
Well, I was just about to try to explain that. So
sorry, continue.
Essentially, that is them purchasing, putting a portion of their cash balance to work to get some sort of return. So
they're buying government securities. That's what they do.
Exactly. Yeah. So they're buying government securities. Ross is right. So they're buying, these short-term, typically, although they could be a little bit longer maturity, government securities. But with the yields rising the way that they have, it looks like Tesla has really decided that rather than purchasing 100 million or 30 million like they did in previous quarters, Q1 they bought quite a lot.
How much was it?
Relative to historical. And so in Q1, they bought 386 million, but in Q3, they ramped it up to 991 million. So almost $1 billion
worth of bonds, which then will produce, let's say, a 4% yield for them, guaranteed.
Exactly.
Okay. This is what I've been doing at work like every day, because it's like, why would you hold cash? It's like stupid to hold cash when you can get 4% guaranteed by the government. And today I got 4.5% actually. And so if you think about $1 billion at 4.5%, all that goes right to the bottom line, all your interest, 100% profit. So, it's good. It's good use of the cash.
So how should we think about this though, Matt? Should we think of this as this potentially was a $1 billion effect on earnings, or should we think this as post, what we did with our cash pile?
Right.
So it's post what we did with the cash pile. So it actually, reduced your free cash flow a little bit because it's an investing activity as it's classified in the statement of cash flows, but it will increase future earnings stream. So they paid down all their debt. And now, so that was an interest expense, and now they're going to have a net interest income going forward. I haven't done the math, but I'm pretty certain that's accurate. And so they're going to have an earnings boost from, essentially, just the yield on their cash pile.
Well, this could be substantial, right? Because if you have 20 billion and you earn 4%, that's a lot of money. That's 800 billion in just capital.
I don't think the whole thing is,
So I mean, to Yashu's point, it's not like they invest. It's a really small part of their cash pile that they've actually, devoted to this, which is kind of interesting. It wouldn't surprise me if they really increase that going forward. But yeah, it'll increase their, GAAP EPS going forward.
Our Tesla star has joined us.
Here we go.
Alex, how's it going?
Time for the main event.
What's your thoughts?
You did this all without me. Now, how did you make better results? Come on, I'm gone for half a day in airplanes, and you're making it all up. What's this?
I think we're getting some lag on your end, Alexandra. Is there something you can do?
Let me pull out. I'm in a hotel. Let me pull out. Let me try.
That's a sick
you need 5G, Alexandra. You got to go 5G.
Yeah.
In the Hilton in Oklahoma City. Let me try that.
They have 5G in Oklahoma City, don't they?
It's a first world city.
It's a first world city. Don't they have internet there? They have internet in Oklahoma, right?
In some form, dial-up probably. I'm sure they got some good stuff.
In some form. Yeah.
Just to give everybody a heads up, the call is about 50 minutes away or so.
Yep.
Minutes. I think we've had some really good discussions so far, but I didn't want to break the flow. But I just want to give everybody a heads up. So once the call goes live, we'll also have this on the stream. So what I'll do is I'll sort of put everybody to the side. I'll ask everybody to mute, and then we'll listen to the call together, and then we'll share our thoughts after the call as well, for those that have time.
Well, yeah, unfortunately, I'll have to say goodbye soon, but
no problem.
Yeah.
I got a question for you, Ross, about the call.
Yeah.
Have you ever asked to be on a call recently? Tried to get in a question or anything like that?
It's funny because Martin sent me this thing, and I think it was like allowing me to ask a question on the call. And I don't know if I did this right.
You should do it. You got to do it.
Right. Although I go onto say.com, and that system works really well, I think. So people post all their questions on say.com. And if you're an institutional investor, you can say which questions you like, and it adds like all the shares you own to that question. So it brings it up. And since we own a ton of them, I don't know relative to like a Morgan Stanley, but we do own a lot of Tesla shares. And so like people ask really good questions. So honestly, like my questions aren't that different than what was posted. So I mark what I want. I'd love to ask a question just to, say hi to Elon kind of thing. But people are asking really good questions, and the questions that were most popular were questions I liked. So, and some of which we talked about today, like the 4680 issue, that's one of my questions. Cybertruck, and truck, production timelines. So, that's really where I'm at. My biggest issue is timelines in 4680. That would be my question. But I got to find this thing Martin sent me.
Send it to Gary if you don't want to do it.
The trick, Ross, is as soon as
banned Gary from those calls.
As soon as the operator gives the instructions, you want to hit *1.
Yeah, but I thought there was isn't there like a different link? I don't know.
It'd be some kind of phone number normally.
Ross, what would be, since you're going to be leaving us here soon, what would be what would be the thing that you think you can hear from the call that would put you over the moon? So like give us like something that would make you really happy to hear and something that wouldn't make you so happy to hear.
Well, one issue I have is that if Elon says things that are great and make me happy to hear, it immediately like creates all this doubt, people like, if he's like, oh, I'm starting Cybertruck production and we expect first cars to be delivered in Q1, I would be thrilled. But everybody would say, oh, that's bullshit. He's never going to meet the timeline, blah, blah, blah. So I don't know if it'll per se move the stock or not. But, for me, Tesla has an amazing year next year in front of them in every category of business that they're focused on. And so I think what would really make me happy is just stability, like in China, like what's happening in Berlin and Texas, getting all this working is really what I care about. Because if Austin's producing cars and Berlin's producing cars, you're talking automotive gross margins are going to go up 5% minimum just because of the massive cash burn that they have right now. And that's where Gary's talking about, or the analysts, like, I get that. But when you're building a factory from scratch and it's massive and you're scaling with massive vision, there is a lot of cash flow burn. And that's why these numbers are so impressive to me, because I was there at the Cyber Rodeo going, this is the biggest building I've ever seen. Okay. And to fill it with equipment and they haven't made $1 yet from this thing. Like, what is margins going to be in 23? What is earnings going to be in 23? And that's what I want to know. And that's what I want to know is like, when do these factories become productive? I expected by early next year. So we're not off track. And keeping China open is huge. And launching Cybertruck and the 4680 question. So that's what I care about. And I'm sure that will all be addressed whether I ask it or not,
I saw a comment.
Anybody else have any thoughts?
I saw a comment, someone saying announcing more gigafactories. I think that would be a good one.
That would be great too.
Right. Yeah. And I think we all kind of know they're kind of like hinting towards somewhere in Eastern Canada, but getting more tangible information on that. Nick's laughing because he knows that Canada's going to get shafted again, which might be true.
I'm with you, man. I'm with you.
But I mean, like, I think everyone, I guess institutional wise, and Ross would know more, but it seems like the biggest touchy point for them is demand. Like, where's the demand? Is there enough demand? To me, it just seems like, if anything, there's just some demand smoothing needing to be done here in the time between now and the new year, when the tax credits might come in effect, or the spring, or whatever it might be. So I'm confident that Tesla and Elon and management and Zach and co are going to be able to address that effectively enough. I still look at the supply side of, if they can build these cars, we already know that they have enough gross margin to, even if they wanted to lower prices, which, by the way, I think is probably coming in some locations eventually. So I think we should all be prepared for that mentally and not let those headlines come to us, because they're probably gonna, and that's fine. Because even at the end of 2020, if you look at the prices, when I got my Model 3 versus it now, it's like 25% higher, something crazy like that. And it's been like not even 2 years, right? So it's just nuts how expensive it's gotten. Yes, inflation is there and all that sort of stuff, but Tesla has the wiggle room to pull those demand levers. Today, we got some news that Tesla is revamping their referral system, and perhaps this is just like the code base on the back end. So you talk about demand lever. I mean, a company that doesn't have demand, why would they be getting rid of their referral system? And so maybe that's one of the first temporary surface level things they can do to increase just demand locally in some areas, is just allow people to send referral links back and forth, even though it doesn't really buy you much. It's just some supercharging miles, but it signals at least that Tesla is looking to prop up some sort of demand. It might be in the short term, because the shareholder deck does read in the medium to long term. That's not an issue for them. But I think there's a lot of moving balls here, I guess.
Why are you so concerned about demand?
No, I'm not. I'm saying, I'm just saying, if anything, it seems like the demand curve just may be a little bit uneven. So I think the smoothing out of the curve between now and when the tax credits come in, the $7,500 tax credits in the new year, it's just a timing thing. Maybe, the Chinese economy, who knows if it's going to get better, but they're globally, aggregate demand wise, that's not an issue, but there might be some.
I think China's going to do stuff to boost their economy next year. So they're going to have to step up their game economically, and that will also be a boost for Tesla, because I do think that's the weakest link risk is actually in China from a demand perspective, not from the United States. But I think it's solved. I have friends in Australia, they're starting to see Teslas around Australia. So you just put the Chinese car on a boat to Australia and you sell it there, So I think, so this is an issue when you scale a product and then you have inventory globally where you have to like have product all around the globe in some level of amount so that consumers can buy your product in a relative period of time. So when you work in one market, it's pretty easy. In two markets, it's pretty easy. But when you expand to 4, 10, 20 markets, and you got a bunch of orders in Norway and a few orders in Australia, and you got to like try to manage this. And that, I think, is where Tesla's at. Companies selling in all these countries with factories on all these places. And this is, once again, a challenging thing to make sure you have all the cars in the right places on the right quarter.
Yeah, exactly. And it's I've said
But
it
you're
before.
going to have more inventory outstanding as you grow, because that's part of growing. And it's the same issue my wife's company is having right now. As they grow, they're growing very fast. Same problem. And it's sucking up capital. In my wife's case, it's sucking up capital because they have to keep putting more inventory out. And that's why I say Tesla's numbers are so impressive, because even as they're putting more inventory out, and even as more cars are on boats, the cash flow is fine. And you can say, oh, they didn't spend as much as SG&A, but that's the cost cutting. That's the discipline that Netflix had in their numbers and Tesla has in their numbers. And you're going to see it in several other tech companies that report where their costs are not going up anymore. They're firing people at Microsoft, and so they're not hiring anymore, and that increases margins. So if you're not sure about what my future brings, all I have to do is keep my costs under control, and I'm in much better shape. So once again, I think that for investors, what really matters is the future, not the past. And that's what these conference calls are most valuable for, is that roadmap. And that's what I think will ultimately drive the stock, whether it be tomorrow or over the next couple of years. It's going to be performance and what people perceive as the vision. But I want to leave you with this one note. The Twitter overhang is a real thing for Tesla stock. And when this deal is completed, hopefully this month, it will be a massive overhang taken off of Tesla. And that alone is bullish for the stock, irrelevant of everything we've talked about today. And so there is a realistic thing going on now that's because of Elon that has hurt the stock, and that's part of why the stock's down. And so there's a lot of positive as we move into Q4 for Tesla from an operating perspective and also from a stock perspective.
Got it. I've been trying to get Gary to start some Twitter overhang merch, like a shirt or something, because he's been on Twitter this whole time. Twitter overhang. And I'm like, Gary, you would make so much money on this thing. What are you waiting for?
Yeah, this Twitter has been like a thorn in everybody.
So let me ask you this. So I'm wondering, so there was a tweet, sort of a cryptic tweet that Elon likes to post from time to time. It was posted about an hour ago or so, where I don't know if you saw it or not. Let me pull it up real quick. But yeah, something about, I'll do everything I can to do the right thing or something like that. Where the hell is it? I'm trying to. Oh, here we go. It was like, I will let you down no matter what. Or something. What do you read into that? Do you have any sort of takes on? Is this a Twitter thing? Is this a Tesla thing? Do you read anything into this?
I got to look at it.
Anybody has any thoughts?
What does it say?
On the screen. I don't know if you can see it. I will not let you down no matter what it takes. It was posted about 3 hours ago.
Yeah, and it wasn't a reply to anything.
No, it was just a tweet.
I think this is more an Elon thing. I've been getting this a lot. A lot of people have been giving me grief over Elon, and they don't like Elon anymore. A lot of people who got rich from Elon don't like Elon anymore. And it's really been pissing me off because, Elon's walked into political issues that maybe he shouldn't. And I don't actually agree with a lot of what he does, but that's irrelevant. I don't have to agree. I think Elon tries to do the right thing. I think he does. I think he tries to be a good person. I don't think anybody's perfect. And I think he's gotten a lot of criticism from people over his tweets about Ukraine. He's been a huge supporter of Ukraine. There's no doubt that he's made a massive difference on the battlefield personally. And he suggests some framework for discussion with Russia, which was obviously a mistake because they immediately paint him as Putin's friend, and I'm like, I don't think you guys understand. Like, he was doing business with the Russians, and now he's basically cut off his ability to work with them. And any attempt to solve this should not be seen as a negative, because this war is a negative for the whole world. Okay. but I think he's been under a tremendous amount of criticism, and he brought it onto himself. And I think what he's trying to say is he's doing his best. And I do think he's fundamentally a good person, and he's trying to do the right things. I do. And I don't always agree with him, and I don't. But that's what I think that tweet means. I don't know if it's a Tesla related thing. But he is getting a lot of heat. Like the Kanye thing was like a disaster for him the other day. You know, hey, welcome to Twitter, my friend. 6 months later, 6 minutes later, Yeezy's banned from Twitter.
I'd like to talk a little bit about the buyback.
Welcome to the fun, you know.
Before the call, I think people are hoping for some talk about the buyback, and they thought Elon's comments were about the possible buyback. And I think what we're seeing with the purchase of nearly $1 billion in marketable securities, that Tesla is buying some conservative securities that, you know, they can sell later if they need to. Obviously, many of us feel Tesla is a better investment than a U.S. Treasury bond. So I think this is showing a conservatism, but also we also need to remember that their accounts payable is $14 billion. And they have about 21 billion in cash. So while we would like to see them use that 21 billion in cash on buybacks, they do need to pay their suppliers, and they will pay their suppliers, especially after they sell the cars that are in transit that are already spoken for. So unfortunately, I don't think we'll see a buyback, and I think people are hoping for that on this call.
I think that's I agree 100%. I don't know why everybody's so hyped up on a buyback.
Wait, Bradford, you're saying we're gonna hopefully see one or likely see one, and then Ross, you're saying
not see it because we're seeing
they're not going to buy their own stock back. Yeah. But it's a smart move from an economic perspective for them to increase their earnings per share through buying what I consider very high yielding guaranteed investments, versus increasing their leverage and risk by buying their own stock at a time where Tesla's finally solidified their place as never being at risk of going BK again. Like, why take any risk when it's only 20 billion? Remember, there's companies with a lot more money on the books that are that size. So it just doesn't make sense for me, this buyback idea. I get everybody wants the stock to go up and they think that that's going to make the stock go up, but it's not, because it's not meaningful enough unless they're buying back 30 or 40 billion of stock. It's not even 5% of the company,
Yeah, for sure. Ross, what do you, or I guess anyone, what do you guys think about the timing of the S&P investment grade upgrade? That was kind of interesting that they did.
Well, that was all Alexandra.
But why not just wait until after the earnings report?
Because Alexandra kept emailing them and tweeting them, and they got sick of her, and they're like, we can't have this woman inflaming all the Tesla community, and they don't even have a bond. How can it be not investment grade when we don't even have a bond to buy?
Yeah. I don't know. For me, I just thought at that point they might as well have waited for until after this report came out.
Well, they see us on Twitter, guys. They see it.
But Yashu, do you think there's a chance that they did it to not seem like they're so far behind? Like, obviously, people are probably asking them. There's press out there. It's like, okay, if you're going to do it before the earnings. That way you don't look like you're just, oh, well, the earnings were good. Now we did it. It's like, it makes it look like, okay, we had this own independent thought. It had nothing to do with the earnings. We came to this conclusion on our own. It almost gives them a little more credibility than, okay, another earnings. Okay, now we decide to do it.
It's an
I don't
excuse.
know. Maybe.
Yeah, fair enough. I don't know. I thought the timing was weird.
It's like betting on a team after you already know the results of the game. It's like, all right.
But that's what their business. That's what their business is.
On rating agencies, they're not betting anything. You know what I mean?
Yeah. Their business is.
I have the stream for the call up on my audio right now, so I'm listening in to wait for the music to stop. My wife just delivered some snacks.
Oh, man.
Pass them over.
I have the best.
Talk about expectations. I'm going home right now. Tell my wife. His wife brought him food.
Farzad, show that closer.
Luckiest man on earth. Luckiest
Seriously,
man on earth. I
and
tell
listen,
you
I'm
what.
lucky too. I love my wife. Like, boy, this is good.
I
This
know.
is good, man. I got to tell her.
I'm spoiled, man. I'm spoiled. I'm
Well,
spoiled.
Farzad, you got to tell us, what is that?
Yeah, what do you got?
So she made an oatmeal like bake type thing yesterday. It's like oatmeal and almond milk, bananas, and chocolate chips. So it's like a healthy snack or whatever. So
Wow.
it's really freaking good. Yeah, it's delicious. She's like sneaks it to me like through the door sometimes when I'm on these like longer live streams. I'm like, I don't know. I'm like, cool. That's great.
Awesome.
You did well.
I like
You did
eating,
really
so
well,
it's good for me. I know.
Congratulations.
I still to this day I don't know how the hell I pulled it off. Thank you. We were married. We'll be 5 years this year. Actually, in about this weekend.
Do you have kids
It'll be 5
yet?
years.
Very nice.
You have kids?
Not yet. Not yet. No.
Well, that explains everything, my man. You haven't even started the game. Of course. Of course, he used to do that before we had kids. You
I
are her
know.
kid. She's just getting.
I'm gonna milk it. I'm milking it all I can.
Oh,
Poor
Farzad,
choice of words. Poor choice of words.
next thing you know, a kid comes out and you're last on the list, my man. You put yourself then.
Hell yeah.
Kid, you're last on the list comes out. That's what happens, my man.
I don't doubt it. But so for the time being, I'm gonna take advantage of the situation, and
For
I'm just
sure.
gonna get all the goodies, and then the next one up. Once we have kids, then they can get all the attention which they deserve. So I can't
your
wait.
expectations to be real now. Okay. So
I appreciate that. Thank you.
now having kids was, and I say it all the time, it was the greatest thing that I've ever done in my life. It's the most satisfying and enjoyable part
That's awesome.
of my life in so many ways, and it's a tremendous amount of work and effort, obviously, but it's just amazing. And it really does change your relationship with your wife in many ways, positive, in some ways challenging. But getting the food delivered to you does end. Sorry.
I'm sure this won't
Room
continue
service
for much
ends.
longer.
Room service ends and your kids get the room service,
It better not
Yeah,
end.
it's funny you say that because we were just hanging out with friends this past weekend that have children that just had their third, and they're like our age, and we can just see how like their relationship has changed, but they seem so much more fulfilled, and it's really cool to see.
Listen, it's great to be without kids and travel and enjoy your relationship. Like, it's phenomenal period of time, but your life drastically changed. My wife and I were just talking about it. It was probably the hardest time for both of us. We were both very independent people, and you have to devote your life now to this child who's just screams most of the time, And so, it is a challenge, but once you get through that challenging period of time, it brings you together in ways that you could never have without children. So, it is a blessing, and it's a wonderful thing, it really is.
I
But
believe it.
certainly
I
from the
believe it. Yeah.
relationship
So
point, it's more challenging.
yeah, I believe it. So the call has started. I'm going to go ahead and unmute, and if everybody can go ahead and mute on your side, that would be great. Here we go.
Thank you very
Here's the
much, Farzad. Thank you.
Thank you, Ross.
Later,
Thank
Ross.
you very much, man.
Great
Appreciate it, brother.
analysis and stuff. Yeah. Thank you.
Number of risks and uncertainties, including those mentioned in our most recent filings with the SEC. During the Q&A session portion of today's call, please limit yourself to one question and one follow-up. Please use the raise hand button to join the question queue. But before we jump into Q&A, Elon has some opening remarks. Elon?
Thank you, Martin. So just to do a Q3 recap, Q3 was another record quarter on many levels. We had our industry-leading operating margin reach 17%, and our free cash flow surpassed $3 billion in Q3 and approached $9 billion in the past 12 months. As our factories ramp, we're looking forward to a record-breaking Q4. So it really, knock on wood, it looks like we'll have an epic end of year. So Q4 is looking extremely good. On the production ramp, Giga Berlin achieved another milestone of 2,000 cars made in a week, with very good quality, and is ramping rapidly. Giga Austin or Giga Texas should reach this milestone very soon. In fact, just yesterday, if you extrapolated yesterday's build rate, it would be 2,000. Our production of 4680 cells has tripled in Q3 compared to the previous quarter. We are finally gaining rapid traction on the 4680 cell, and its output is growing rapidly, and we expect it to start incorporating in cars and having it be a significant portion of our production here in Texas in the coming months. We also have our second generation of manufacturing equipment for 4680 cells in Texas, which continues to show great progress along with our original pilot line in Fremont. The Fremont factory team once again reached record production in Q3, and we intend to keep raising production in Fremont. Regarding Autopilot, at the end of September, we hosted our second AI Day and showed the first prototype of our Optimus robot, the latest updates on our Dojo training computer, and a wide range of improvements of full self-driving software. Our vehicles have now driven nearly 60 miles in full self-driving beta mode, and this number continues to grow exponentially. Our goal with that AI Day was recruiting, and we've seen a massive influx of world-class artificial intelligence engineer and scientist resumes. So it generated a tremendous amount of interest from some of the best AI researchers in the world. I can't emphasize the importance of this enough, because I think it finally has become clear to the smartest AI technologists in the world that Tesla is among the very best. So, and this quarter, we expect to go to a wide release of full self-driving beta in North America. So anyone who has ordered full self-driving beta or full self-driving will have access to the FSD beta program this year, probably about a month from now. So, and then obviously anyone who buys a car and purchases a full self-driving option will immediately have that available to them. So the safety that we're seeing when the car is in FSD mode is actually significantly greater than the safety we're seeing than when it is not, which is the key threshold for going to a wide beta. Let's see, with respect to demand, we've got a lot of questions about demand in recent weeks. I can't emphasize enough, we have excellent demand for Q4, and we expect to sell every car that we make for as far into the future as we can see. So the factories are running at full speed, and we're delivering every car we make and keeping operating margins strong. So we're still a very small percentage of the total vehicles on the road. Of the 2 billion cars and trucks on the road, but we only have about 3.5 million. So we've got a long way to go to even reach 1% of the global fleet. Let's see, based on my what people are, based on many things, but certainly questions I get on Twitter about buybacks, and I think every one of our board members has gotten questions about buybacks. We've debated the buyback idea extensively at the board level. The board generally thinks that it makes sense to do a buyback, but we want to work through the right process to do a buyback. But it is certainly possible for us to do a buyback on the order of $5 to $10 billion, even in the downside scenario of next year. Even if next year is a very difficult year, we still have the ability to do a $5 to $10 billion buyback. This is obviously pending board review and approval. So it's likely that we'll do some meaningful buyback. So in conclusion, while the market themes revolve around the short term, it's very important to focus on the long term. I can't emphasize this enough with investors, and I think long-time investors obviously recognize this with Tesla. You have your sort of local ups and downs, but the long-term trend has been extremely good. And several years ago, I said, I think on an earnings call, that I thought it was possible for Tesla to be worth more than Apple which was then the highest market cap company, I think, on the market. And Apple at the time, I think, was around $700 billion. And I said it required incredible execution, and at least some luck. And we didn't indeed achieve that. Tesla went, in fact, far past Apple's market cap at the time. I now am of the opinion that we can far exceed Apple's current market cap. In fact, I see a potential path for Tesla to be worth more than Apple and Saudi Aramco combined. So now that doesn't mean it will happen, or that will be easy. In fact, I think it will be very difficult. It will require a lot of work, some very creative new products, tremendous expansion, and always some luck. But for the first time, I am seeing, I see a way for Tesla to be, let's say, roughly twice the value of Saudi Aramco. And I think that's, I haven't quite seen that yet. I mean, this is the first time I'm seeing that potential. So, I mean, we have an incredible product portfolio. I think we've got the most exciting product portfolio of any company on earth. Some of which you've heard about, some of which you haven't. We're in the final lap for Cybertruck. We're building the Cybertruck line here at Giga Texas, Austin, and making a lot of progress in the robotaxi platform design. And then with respect to batteries, we're moving as fast as possible to have to achieve 1,000 gigawatt hours a year of production capacity in the United States. Vertically integrated. So anode, cathode, lithium refining. We're moving at top speed to do that. So I think it's an incredibly exciting future, and really an unprecedented future. But none of this would be possible without the incredible team that we have here at Tesla. So I'd like to give a huge shout out to all of our factory employees, engineers, executives, and the whole Tesla team. You guys rock. You're the ones making it happen. Thank you. Thank you, everyone.
Thank you very much. And Zach has some opening remarks as well.
Yeah, thanks, Martin. Just to continue on Elon's theme, I just want to thank and congratulate the Tesla team for achieving record vehicle deliveries, production, and storage deployments in the third quarter. On automotive profitability, our GAAP operating margin was 17.2%, with automotive gross margin at 27.9%. Operating margin is one of our best yet, with improvements in operating leverage. However, Austin and Berlin ramp costs weighed on our margins, particularly if you compare it to Q1. Removing regulatory credits and Austin and Berlin, our operating margins would have been our strongest yet, and auto gross margin would have been nearly 30%. Note that while small and growing, each car we build in Austin and Berlin is contributing positively to profitability. We also continue to experience margin headwinds associated with macroeconomic conditions, as we've discussed at length on prior calls. In particular, raw materials, logistics, and foreign exchange was a big part of this past quarter. On energy profitability, we achieved our strongest gross profit yet for this business, driven primarily by record volumes of our Megapack and Powerwall products. Our free cash flows were also a record, despite an increase in cars in transit at the end of the quarter, which has a negative impact on working capital. Specifically on cars in transit, as noted in our press release on October 2nd, We've started to experience limits on outbound logistics capacity, which we didn't anticipate. This issue is particularly present for ships from Shanghai to Europe and local trucking within certain parts of the US and Europe. Our historical operating pattern of batch building by delivery region leads to extreme concentrations of outbound logistics needs in the final weeks of each quarter. Just to put this in perspective, roughly 2/3 of our Q3 deliveries occurred in September and 1/3 in the final 2 weeks. As a result, we've begun to smooth regional builds throughout the quarter to reduce our peak needs for outbound logistics. We expect this to simplify our operations, reduce costs, and improve the experience of our customers. As we look ahead, our plans show that we're on track for the 50% annual growth in production this year, although we are tracking supply chain risks which are beyond our control. On the delivery side, we do expect to be just under 50% growth due to an increase in the cars in transit at the end of the year, as noted just above. This means that, again, you should expect a gap between production and deliveries in Q4, and those cars in transit will be delivered shortly to their customers upon arrival to their destination in Q1. Austin and Berlin ramp costs will continue to weigh on margins, although we expect the impact to be less than what we saw in Q3. And as Elon mentioned, we are continuing to build as many cars as possible while also maintaining strong operating margins. Thank you.
Thank you very much. And let's go first through the shareholder questions. The first shareholder question is, given the stringent battery content and assembly requirements for consumer tax credit eligibility under the Inflation Reduction Act, can you speak to Tesla's ability to meet those thresholds in each of 2023, 2024, and 2025 with your existing and planned supply chain?
Well, yeah, I mean, I think just at a high level, I'd say we do expect to fully meet the IRA's requirements.
Yeah, we view the passing of the Inflation Reduction Act as a significant boost towards accelerating our mission, while also scaling the battery supply chain at large in the United States. We expect Treasury to publish detailed guidance by the end of the year. Until such time, it's difficult to fully determine the eligibility criteria, but we believe Tesla is very well positioned to capture a significant share of that for solar storage and also electric vehicles.
Yeah, like I said earlier, we're going to go basically pedal to the metal as fast as humanly possible to get to 1,000 gigawatt hours a year of production in the US, vertically integrated.
Thank you. Let's go to the next question. The next question is, what updates can you offer on the backlog and recent order intake trends, especially outside of the US and especially in China?
Well, it's there's definitely, China is experiencing a verse of a recession of sorts, which is property market, simply from a property market mostly. And Europe has a recession of sorts driven by energy. The US actually is in pretty, North America is in pretty good health. Although the Fed is raising interest rates more than they should, but I think they'll eventually realize that and bring it back down again. So, demand is a little harder than it would otherwise be, but as I said earlier, we are extremely confident of a great Q4, and we anticipate continuing to grow our vehicle production, sales deliveries by, on average, 50% a year as far into the future as we can see.
Thank you.
Actually, one caveat I should say, growing production by 50% every year, because deliveries, we're trying to smooth out the deliveries and not have this crazy delivery wave at the end of every quarter. So, in fact, we were just fundamentally running out of, there weren't enough boats, there weren't enough trains, there weren't enough car carriers to actually support the wave. Tesla got too big. So whether we like it or not, we actually have to smooth out the delivery of cars intra-quarter because there just aren't enough transportation the objects to move them around.
Thank you. The next question is, do you still expect 50% annualized growth for the foreseeable future? Is this also true specifically for the Chinese domestic market? Do you expect to need to cut vehicle prices or offer incentives in any market to sustain the demand? Or has demand remained stable, or is it even rising? Quite a few questions there.
Well, like I said, we want to sort of focus at a high level on what we think is possible here. To the best of our knowledge, we believe that Tesla will continue to grow deliveries and revenue production at a 50% or greater compound annual growth rate. It might occasionally be a year that is a little less, and then some years will be maybe a little more or a lot more. In some of our out-year planning, we see potential annual growth rates that are in excess of 50%.
Thank you. The next question is, can you tell us more about the product feature roadmap beyond new models and FSD, and especially for interior and powertrain of existing vehicle models?
No. we could, but we won't. Sorry, guys, we can't like jump the gun on future product announcements.
Committed to continuous improvement.
Yeah, we obviously will continue. Yes. First, obviously, Tesla's not yet. We'll also be committed to continuous improvement. Yeah, at Tesla, we've always been committed to continuous improvement. So, as friends of mine ask me, like, when should I buy a car? I'm like, now, because we just keep improving the cars. It's always the latest Tesla. Yeah, best Tesla, the latest Tesla. So, and I really, yeah, the new, you know, every now and again we do have some, you know, big technology upgrade like Plaid. And by the way, I think the Plaid Model S and X are just the best cars on earth. Best. There's nothing even close, in my opinion. Just try one. Yeah, epic.
Thank you. The next question is, we keep hearing of dire energy crisis in Germany this winter. What are Tesla's plans to combat power cuts? And will there be any delays in ramp up in production from Giga Berlin because of this?
Yeah, I can take it. I think 2 points on this question. The first is that, you know, based upon everything that we know, we don't see this as a large risk to the company. You know, even if production did go down for a period of time, this is all near term. It doesn't have any impact on the long term of the company.
But we have no indication whatsoever that we will have to cut our production in Germany.
No. And we put in place backup plans, and we're working through the supply chain as well. Nearly all of our suppliers are prepared as well. So we'll see how this plays out, but it's not something that we're terribly worried about.
Thank you. And the next question is, how is production planning going for the Cybertruck? What is the initial phase 1 production target? When can we expect an update on pricing and final design?
Yeah, I mean, as Elon said earlier, we began facilities preparations here in Giga, Texas for Cybertruck. We're still on track to enter early production in the middle of next year. We started our beta builds of all of the body and existing.
When can I drive my beta? That's the question.
In a few weeks.
Okay, great. Thank you.
And that's going well. And you know, we continue ramping up through the end of next year and into 2023.
Great. Yeah, the car's gonna be sick. Man, sick. That's gonna be a Hall of Famer, next level. Sorry, it took it longer than expected, but you know, there were a few things that got in the way, like insane global supply chain shortages and pandemics. Yeah, sure. Force majeure if there ever was one.
All right, thank you.
Of course, Tesla Semi, of course. You know, so we'll be handing over our first production Tesla semis to Pepsi on December 1st. I'll be there in person, and we'll begin ramping up production of the Tesla Semi, which is a max load heavy truck.
Yeah, that's a Class 8 truck.
Class 8 truck.
No sacrifice to cargo capacity.
Yeah, no sacrifice. Exactly. Very important. No sacrifice to cargo capacity. 500-mile range. Just be clear, right? 500 miles with the cargo. Just, yeah, 500 miles with the cargo on level ground. Yeah, fair. You know, so not up. You know, close. But the point is, it's a long range truck, and even with heavy cargo. And the number of times people told me, "Oh, you can't. It's impossible to make a long range, heavy duty Class 8 truck." And then I asked, well, what are your assumptions about watt-hour kilogram and watt-hours per mile? And they would look at me with a blank stare and then say hydrogen. I'm like, no, that's not the answer. I was looking for numbers. Literally. That's not a number. That's an element on the periodic table. Anyway, you obviously don't need hydrogen for heavy trucking. That's what we're trying to make here. And we'll be ramping up semi-production through next year. As you know, I think everyone knows at this point, it takes about a year to ramp up production. So we expect to see significant. We're tentatively aiming for 50,000 units in 2024 for Tesla Semi in North America, and obviously we'll expand beyond North America. And these would sell. I don't want to say what exact prices, but they're much more than a passenger vehicle. So the 50,000 heavy trucks of this nature would be worth several Model Ys.
Thank you. The next question is, what is the progress of the 4680 cell ramp, and what factors determine whether vehicles get 2170s versus 4680 cells, and how will that change in the next year?
Yeah, ramp is going well. As Elon said, total output is up 3x quarter over quarter, and production is tracking to exceed 1,000 car sets per week this quarter, as we said last quarter. Our focus is now shifting from 100% ramp to cost and further expanding production capacity in North America, as Elon also mentioned. On the 2170 versus 4680 in our factories, we really attempt to minimize factory complexity and product changeover, while still making sure we get enough new product into the field to learn how it is performing. And that sort of mix is going to shift as the 4680 scales here and the overall factory ramp proceeds in Texas.
Right. But basically, in a nutshell, 4680 ramp is growing exponentially, and yeah, it's going well. It's looking good. This yeah, is going to be a very major factor in the future. There are a lot of packs up 6. Yes. Like I said, our goal is to strive towards 1,000 gigawatt hours a year of annualized production in the United States alone by Tesla, not including suppliers. Suppliers would be on top of that.
We need to get 300 to 400 terawatt hours built to accomplish our goal.
Yeah, there's roughly, to transition Earth to sustainable energy, our rough calculation for both stationary and vehicles is 300 to 400,000 gigawatt hours, or 300 to 400 terawatt hours.
So when you're like 1 terawatt, it sounds like a lot. Well, it's a lot of terawatt hours to go.
Yeah, and that's just on the cathode side. The main cathode we think would probably be iron, and mostly iron, because iron can scale to very, very high tonnage, and then some nickel. The exact percentages are hard to figure out, but it's probably at least twice as much iron cathode as nickel, maybe more, and then the manganese wild card as well. Sound right to you?
Yep. Okay. And on that note, we're pursuing aggressively North American iron cathode supply.
Yeah.
And have, yeah, we can talk more about that at a future date.
Yeah.
All right, thank you. The next question was on the semi-truck, which we already addressed, so I'm going to skip to the next one. Can you talk about how Tesla could adjust if we were to enter a prolonged recession, including new product prioritization, investment flexibility, new factory versus factory expansion, service support infrastructure, productivity cost measures, and demand stimulation alternatives?
Well, to be frank, we're going pedal to the metal, come rain or shine. So we are not reducing our production in any meaningful way, recession or not recession. So
it's the 1% point you made.
Yeah, exactly. So I think the public at large realizes that the world's moving towards electric vehicles, and that it's foolish to actually buy a new gasoline car at this point, because the residual value of that gasoline car is going to be very low. So, so I think we happen to be in a very good spot. That I wouldn't say it's recession-proof, but it's certainly recession resilient. Because basically the Earth has, the people of Earth have, in large part, made the decision to move away from gasoline cars to electric cars. And then in transitioning electricity generation to sustainable, you need solar and wind with a stationary battery pack to buffer the power. So you have 24/7 power, because the wind doesn't blow all the time and the sun doesn't shine all the time. So that also is, we actually see the energy storage business, stationary storage, growing more like, I don't know, 150 to 200% a year. So faster than cars by a lot.
And sorry, just to add, before you jump in, Martin, I mean, just to echo Elon's point, I mean, I think, where our cash balance is, what our forecasted cash generation is, where our margins are as a company, I mean, we can withstand quite a lot of downside before we would have to dig into our capital plans, supercharger expansion, product lineup. So, the business has done quite well over the last handful of quarters. And this is a real opportunity, I think, for the company to press forward in the most aggressive way, as Elon is mentioning.
Yeah, we try to model out, like, let's say 2023 is a brutal recession year. Even then, we generate meaningful cash. Once you get out of that 2024 plus, it's insane.
Great, thank you very much. And let's go to the last investor question, which is the progression from Tesla's first platform with SMX to the second platform with 3 and Y led to 50% reduction in cost of goods sold. What do you see Tesla's third platform being released, and what level of cost of goods sold reduction could you achieve?
Well, we don't want to talk exact dates, but this is the primary focus of our new vehicle development team, obviously. But we're at this point, we've done the engineering for Cybertruck and for Semi, and so it's obviously, you can guess what we're working on, which is the next generation vehicle, which will be probably about half the cost of the 3Y platform. It'll be smaller, to be fair, but it will, I think, swiftly exceed the production of all our other vehicles combined.
Yeah, I mean, obviously, we're going to take everything we learned from SX, 3Y, Cybertruck, and Semi, and pour it into that platform. But we, as you've said to us many times, we're on a 2-for-1 target. So
yeah,
that implies that trying to get to that 50% number again.
That's exactly. It's like, what would it take to? That's exactly what Lars strikes is what we're trying to figure out. How do we make 2 cars for the amount of effort that it currently takes us to make 1 Model 3?
Yeah, effort, costs,
yeah,
performance,
efficiency,
yeah, all those things. Half the loss, half the cost, half the factory floor space.
For twice the output. And we do believe this can be done. Yeah. By the way, I should mention that when I said that probably that I see a path, again, extreme, very difficult path, incredible execution required, massive amount of hard work and some luck to get to where Tesla is worth as much as Apple and Saudi Aramco combined. I wasn't including Optimus.
Thank you. Let's go to analyst questions next. The first question comes from Adam Jonas from Morgan Stanley. Adam, go ahead and unmute.
Great. Can you hear me?
Yep.
Yeah.
So Elon, would you consider vertically integrating into mining? That's my first question.
We'll do whatever we have to. Whatever the limiting factor is, we'll do. We do not artificially constrain ourselves. We don't vertically integrate just for the hell of vertically integrating. Like if there's a great supplier who's better than us, or we think at least very good, or even where the economics of comparative advantage suggests that we should use that supplier, even if we could beat them, but we could use our resources to do something else that would be more productive, then we won't insource in that case. But if we have to go mine, we will mine.
Okay, thanks, Elon. My follow-up is, 1 terawatt hour of manufacturing in the United States, vertically integrated. I guess my question is, what would need to change with U.S. permitting laws to allow that? Kind of what would be your message to this administration or next? And do you think you could do a terawatt hour? What's the going price of that? Can you do that for under $100 billion in the States? Thanks.
Well, I think that the message to the government would be that there should be, I should say we've actually had conversations with a number of the senior government leaders, White House, Congress, and whatnot, and the suggestion that we have is that there should be an expedited permitting process for anything which is critical to a sustainable energy future. So it doesn't make sense to put like a coal mine and a sustainable energy battery like lithium mine in the same category. Coal does not have a future, lithium does. And by the way, you can extract lithium with almost no disturbance to the local environment. So it's not like some ugly, nasty mine situation. So I would recommend expedited permitting would really be helpful. Basically, yeah, fast track environmentally. I think it sounds fast track things that are important for the environment and humanity's future on Earth. That seems logical. Okay. And the reception has been positive, so we'll see if something happens with that. I think probably on this earnings call, we're not ready to get into financial details of what it would take to get there, but what we are seeing is radical improvements as we redesign the whole supply chain and all of the elements that go into battery cell. We're figuring out dramatic efficiencies that I think will the net result of which would be that the capital required to achieve that level of output will be much less than what people think.
Thank you very much. Let's go to the next question from Colin Langan from Wells Fargo. Colin, go ahead and unmute. Colin, can you click unmute?
Oh, you hear me now?
Yeah, we can hear you.
Oh, okay, sorry about that. Any update on full self-driving? I think you had said a couple quarters ago it would be available by the end of the year. Is that still possible? Would it still be like a level 4 or level 5 that you're talking about? And are there any sort of regulatory hurdles you'd have to think about?
As I said earlier, we're expecting to release the full self-driving software to anyone who orders the package for the end of this year. It's a separate matter as to will it have regulatory approval. It won't have regulatory approval at that time. But but the car will be able to take you from your home to your work, to your friend's house, to the grocery store, without you touching the wheel. So it's looking very good.
And it would mean like level 4, level 5 kind of traditional definition you're talking about.
Well, there's a debate as like what are the interventions per mile and all those, maybe the safety interventions per mile. Like we're not saying that that's quite ready to have no one behind the wheel. It's just that you will almost never have to touch the vehicle controls. So like when I came to Giga Texas today from friend's house, I never touched any of the controls all the way in here. And then there is a longer process of like what's called the March of Nines, of like how many nines of reliability do you need before you could really be comfortable saying that the car could drive with no one in it. That's there's some subjectivity as to how many nines you need, but I think we'll be pretty close to having enough nines that you can have no one in the car by the end of this year, and certainly without question whatsoever in my mind next year. And I think we'll also have enough data next year to be able to assure to regulators that the car is safer, much safer than the average human.
Got it. And just as a follow-up, you mentioned in the prior questions about IRA. I mean, it sounded like you thought you could get. Can you get all of it? I mean, because my interpretation is like the production credits, battery component credits for buyers seems very likely for you guys. Is the sourcing part of it possible? Because that seems like a pretty tough hurdle given how much has to be sourced from the U.S.
Yeah. So we have a cross-functional team that's looking very closely at it. As you mentioned, the sourcing threshold increases by the year. So we're looking at all options and also getting some clarification from Treasury. It's important to say that's only a fraction of the other credits. We do manufacture ourselves in the U.S. We manufacture the modules in the U.S. So that's pretty free and clear. So yes, we feel confident that we'll have a path as these incentives, as the threshold sort of increases by the year.
Yeah, we'll meet those thresholds.
Thank you. The next question comes from Colin Rush from Oppenheimer. Colin, please go ahead and unmute yourself.
Thanks so much, guys. You know, the operating leverage has been pretty impressive here, and I'm curious about areas where you could, invest in an incremental way, whether it's on the R&D side or on the sales side to accelerate growth or cost reduction, or should we be thinking about this level of spend on a go-forward basis and some significant operating leverage as you scale up from here?
Yeah, I mean, our operating leverage has improved quite a bit. It's the lowest this quarter, I think, ever, and by a decent amount. Our OPEX as a percentage of revenue. I mean, our forecast is that it will keep reducing. I mean, I think the way to think about it is, our total amount of operating expenses will slowly tick up as the company grows. It's very hard to keep it flat with the rapid growth of the company, but it's growing much slower. So some amount of growth there, but the top line of the business is growing so quickly. So I think there continues to be enormous opportunity to improve the overhead efficiency of the business, and we're seeing it.
Yeah.
All right, great, guys. I'll take the rest of that offline.
We are in the at least for now, quite good position of we're investing in everything we can think of to possibly invest in, and we're still generating cash. So I guess it's a pretty good place to be.
Yeah, I mean, how many R&D programs are we running in parallel right now?
People don't even know all the R&D stuff we're doing. Some of it, but I'm sure they don't.
We
I also don't think cash is a good gauge of how much R&D you're.
No, it isn't. Because it's like this. Like it's not like it's not like engineers are not just, they're not generic. And so it's just like, oh, if you spend, 5 billion or 10 billion, that will that your actual R&D in terms of useful product ship will be proportionate to that. It's just not true. Engineers aren't coming off some assembly line like cookies or something.
Until we get Optimus coming.
Yeah, Optimus don't change things. What matters is where are the most brilliant people working, and Tesla remains the Tesla and SpaceX are the two companies where the smartest engineers want to work.
I mean, like, we don't have to spend billions of dollars to invest in the future and invent the future. Engineers are also cost conscious, and we don't necessarily just burn money out the window when we're trying to do R&D. So I would stop looking at like R&D as a cash investment for how much we're doing.
Like one nickel at Tesla is frankly worth an infinite number of dollars of engineers. Well, you could have like almost an infinite number of good engineers. And they would not be able to do what one nickel at Tesla could do. You can't make it up in volume.
Okay, thank you very much. Let's go to the next question from George at Canaccord. George,
hi, good afternoon, and thanks for taking my question. I think it was at your annual shareholders event where Elon mentioned that the prices of many of the materials used in your production have started to come off the boil. If that continues, does that give you an opportunity to adjust prices globally after several increases? Thanks.
Well, we're looking at the prices at our prices closely. I mean, obviously, anyone can just Google what the price of the future price of copper or steel is going to be. It's just like one Google search away. And everyone can see that the commodities on a go-forward basis are on a dropping line. But in electric vehicles, things like battery-grade lithium are still crazy expensive. So we've got a mixture of things where prices are dropping and things where prices are increasing.
Yeah, I mean,
I would say quarter-over-quarter, steel, aluminum has dropped anywhere between 17 to 20%. At the same time, on the battery side,
the cost of shipping has come down tremendously.
Yeah.
Like last year, the cost of a container on the spot market from Shanghai got as high as $20,000.
Wow.
And now it's $3,600. It's come back to reality.
Yeah.
So we're seeing deflation on a lot of commodities, with a few exceptions, as you mentioned, on batteries.
There's more deflation than inflation.
Definitely.
And again, this is publicly available information. Anyone can just Google it. And I think Kathy Wood at ArkInvest is trying to make this point over and over again to the Fed, and the Fed is not listening because they're looking out the rearview mirror instead of looking out the front windshield.
Yeah, just add a little bit more context. So, commodity increases were the highest in Q3 that we've seen over the last 2 years. And so, when indexes change, it does take time before they flow through our financials. Yeah, there's latency.
This is why I say the Fed's decisions make sense if you're looking out through the rearview mirror, but not if you look out the front windshield. And they should look out the front windshield.
Yeah, and so at least of what we know so far, so peak on the commodity side in Q3, I say peak, hopefully it stays the peak. Hopefully it starts to come down. There is a small amount of reduction that we're seeing going into our Q4 cost structure, from steel and aluminum primarily. But it's less than 10% of the total increases we've seen so far. So, we're optimistic here based upon what we're seeing on the indexes for some of our cost structure, that this will start to come in over time. But I just want to set expectations that there's not some windfall of cost reduction in this space coming in Q4. Maybe some as we go into next year.
Yeah, I think we'll probably see some.
Audio cut out, Farzad.
benefit from operating under a single superstructure, if at all, similar to Google or Alphabet?
It's not clear to me what the overlap is. It's not zero, but I think we're reaching. I'm not Warren Buffett. I'm not an investor. I am an engineer and manufacturing person and a technologist. So, I actually work and design and develop products. That's what I do. So it's not we're not going to have a sort of portfolio of investments or whatever. So I don't know. I don't see an obvious sort of where they could get combined under an umbrella, at least right now. I'm excited about the Twitter situation because obviously I know that product incredibly well, and I think it's an asset that has been sort of languished for a long time, but has incredible potential. Although obviously myself and the other investors are obviously overpaying for Twitter right now. The long-term potential for Twitter, in my view, is an order of magnitude greater than its current value.
Thank you. Let's go to the next question from Pierre Ferragu from New Street Research. Pierre, go ahead, please, and unmute.
Yes, Can you hear me, guys? Sorry.
Yeah, we can hear now.
Great. I'd love to have another update on 4680, Drew. And so last time we talked about it, it was questioned about scaling out manufacturing, and there were still a few things to get right. Is it fair to say that now you are at scale and it's just a question of logistics to get bigger? So that's question number one. And then question number two, on the kind of innovation and cost reduction and efficiency improvements kind of path that you described at the Battery Day, where that are we today, and how much time is it going to take to deliver, all the potential you outlined then?
Well, I'll take the second question first. At Battery Day, we showed a timeline out to 2026 for all of the ideas we had proposed and had, shared with everybody then. And
yeah, I'd be surprised. I think we'll do better than that.
Yeah, I mean, but just that's the rough. Just give you all, it's on that order. It's not like a month. It's not 6 months. It's years, and we are executing on all of those different ideas pretty aggressively in parallel with the OpEx that some people think isn't enough, but we're getting it done.
I mean, I'm not turning down POs,
No, yeah,
exactly. So
yeah, or great talent. Like we find awesome engineers, we bring them into the company, and people shouldn't believe we are turning people away.
Yeah, I mean, it's a hard problem, but we're solving it, and I think we still feel confident that the 4680 will be the most competitive battery cell in the world.
And it's the whole system around it, right? It's not necessarily a specific form factor. It's the attention to detail on how to break costs out of the manufacturing process, how to remove processing steps.
And all the way down, from the mine to the cell.
Yeah, exactly.
Many steps along the way.
Yeah, and for those who watch the YouTube videos, like our on-site cathode facility is coming together. Really excited about that, which is a part of the plan that we discussed on Battery Day.
Yeah, but we're also building a lithium refinery
in Corpus Christi. Yeah. So we're making putting our money where our mouths are and all the various efforts that we discussed on Battery Day. On the technical challenges and the ramp question, which is your first question on 4680. Look, no ramp is ever easy, even at the end when you're 80% to the end. Like it's still very challenging to get to the end, and that sort of leaning out of yields, the final cycle time, to achieve target, Well, you mentioned logistics. It's not something that we're specifically focused on, I guess, but eventually could be a problem as we're talking about hundreds of gigawatt hours at different sites across the United States. But I would never sit here and say we have no challenges remaining, but we've made a lot of progress reducing technical risk in many areas. Cycle times have dramatically improved, yield has dramatically improved. And just walking the line here in Texas, like Martin was walking it yesterday, made some comments to me. You really see the acceleration around you. And we've made a ton of simplifications moving from the Fremont factory to Texas, and it's coming to play in speed of ramp here. And of course that's on one line of many here in Texas. So it's not like factory to factory. It's a multiplication of both simplicity and scale. So yeah, we're excited about where it's headed.
Yeah, and I think once we are fully integrated, I think we still do see a path to pull a roughly $70 kilowatt hour cell. So $70 per kilowatt hour. So yeah, before any incentive. Before incentive. Yeah. Yep.
Thank you. And the next question comes from Tony Sacconaghi from Bernstein. Tony, go ahead and unmute yourself, please.
Yes, thank you. I just wanted to follow up on the 4680 cells and where we are seeing them deployed today. So are those in the semis that are being delivered on December 1st? Are we seeing them in Model Ys that are being produced out of Austin? And do you anticipate 4680 being a gating factor for Cybertruck ramp later this year? And how do you balance the need for 4680 across semi, Cybertruck, and potentially Model Y in 2023? And I have a follow-up, please.
Wow. Okay. Well, a semi doesn't use the 4680s. Yeah. Yes. Yeah. So we are making Model Ys. Some of the Model Ys coming out of Giga Texas are 4680. And I think, Drew, the car you drive around is 4680.
Yep.
Model Y.
10,000 miles.
10,000 miles. Yeah, it's pretty good.
No problems yet.
Yeah. Structural pack. Yeah. So, yeah, I mean, our output at 4680 is growing exponentially. So, but it's worth bearing in mind, like there are entire highly competitive companies that are very smart that all they do is make battery cells. This is simply one segment of Tesla.
Yeah.
So, it's not a total walk and talk.
No, there are challenges still ahead that we have not yet surpassed, no doubt.
We don't anticipate this being any limiting factor for Cybertruck or anything else.
Okay, thank you. And the last question comes from William Stein from Truist. Go ahead and unmute yourself, please.
Great, thanks for taking my question. I guess I'll go at one that I asked last time, Elon, which is your expectation for the likelihood of commercial success in each of the three major AI endeavors, FSD, sort of as imagined without a driver, the training computer, and of course Optimus.
We'll achieve full self-driving, full autonomy. My probability of that occurring is 100%. And I think we'll, we're almost there. And then of course we got to prove it to regulators and get the regulatory approvals, which is outside of our control. I mean, anyone who's driving full self-driving, has the full self-driving beta in the car, can see the rate of improvement. You just experience for yourself that we are in fact getting there. In fact, we almost are there. So anyway, probably achieving that 100%. The Optimus probability of that being a successful product, I think, also extremely high. Given enough time, 100%. Dojo, it's maybe more of a question mark around Dojo of like, can we be competitive with NVIDIA GPUs even as NVIDIA continues to rapidly evolve their GPUs? So the jury's out on Dojo. Dojo team thinks they can outperform NVIDIA for neural net training. But the jury's out, and we'll probably know, I don't know, next year if that's if that's true or not. But we think we're probably we think it's let's say the architecture of Dojo has is the right architecture to win. It depends on how well we execute within that architecture.
Thank you very much. I think, unfortunately, it's all the time that we have today. So thank you so much for your great questions, and look forward to talking to you in about 3 months from now. Thank you, and have a good day.
Thanks, everyone.
Wow. Thanks for making all those notes, dude. Wow, you were getting that's crazy. And by the way, I have people already messaging me to ask you for access for those notes.
Yeah. So let me go ahead and share the link in the notes. Yeah, I do these with every call. I find that people find it helpful. So yeah. And let me go ahead and do that now. What do you guys think? There was a lot there. That was a lot.
That's a lot.
I'll step back.
Who wants to go first? I have to go use the restroom here in a second once I share the link. So let me see. Link to notes. So there it is. I'm also going to tweet it out. Linked to. Go ahead.
Farzad, you clearly missed your calling as a scribe. Clearly.
That's why I ended up in the kind of roles that I did at like my careers, because I have my typing speed's pretty decent. So I always end up being the default note taker, But it's okay. I enjoy it. I like typing. And there's just something relaxing about it. Anyway, enough about me. Who wants to go first?
My list of topics was like really long. Like I tried to boil your notes down into topics, and my list of topics is like insane. I think this call is actually a lot for us to chew on, and a lot of great insights. One of the biggest things that I had a suspicion on, so I totally wrong about buyback. I'm glad.
Well, kinda.
One of the suspicions I had was the reason why Elon was pushing FSD beta out to the rest of North America or US is because it's actually what they're seeing is the data is actually safer when people are on the beta, because people are like hyper vigilant. You're watching the car like crazy, but when you're not on beta, then probably what people are doing is distracted driving. And things like that. So I think that was a really good insight. It's a lot of bullishness around autonomy. Elon's been bullish since 2017, but he said that he believes the probability of achieving autonomy is 100%. That was toward the end of the call. So many topics in here. What stood out for you, Matt?
Yeah, I mean, for me, it was like I was kind of hoping he touched on the Inflation Reduction Act and maybe hinted a buyback. And it was like, oh, yeah, we're going to qualify for the IRA credits for sure. Like, and then they're like, well, pending IRS guidance. So like, no, we'll qualify. So I thought that was pretty interesting. And then for sure, the buyback, it was like much more strong language than I was really anticipating. So like, roughly $5 to $10 billion buyback in the near term. That certainly stood out. And the demand, they didn't talk explicitly about orders. And so I thought if I'm putting on my skeptical Wall Street hat, I might say, okay, you are pushing ahead super aggressively with all your R&D spending, and you're like pedal to the metal, to use Elon's own words. And what happens if demand just completely collapses? So I don't think that's going to happen, but that's like a lens that I was putting on to, think how, why is the stock down so much on, a modest earnings beat, and frankly, really, really great commentary from my point of view.
Yeah, Elon seemed very open in this call to talk about and talk in a way where like normally you haven't really seen him speak like that. Like the bullishness, worth more than double Saudi Aramco, Apple, and like he's quoting like you don't really see that. And I guess skeptics on Twitter and I'm reading around, and people are like, "Well, Elon has to sell shares. That's why he's trying to pump up Tesla and all this stuff." I mean, how epic would it be if he came out a week from now and we knew that he didn't have to sell shares and this is what he actually believed in, despite what the skeptics might think? So I thought fundamentally speaking, the doubling down on no demand issues is great. It's a great signal. It's not even like there wasn't even a sniff. It wasn't even like well, yeah, we might. And if that's what happens, we can always tone down our production. It was like, no, we're going full blast on production. We're not stopping. And remember, I think Zach said, like, remember, we have a lot of room to play with our gross margins as well, if we ever needed to, not to mention toning down on supercharging networks or R&D costs, all this other stuff that they can focus on first. So there's that. The buybacks is interesting, but again, not a short-term thing. I don't think it's going to matter here in the short term. In the long run, it's going to reduce the float. It's going to be great. I don't think it's, I think one point that was kind of missed almost was like Elon said 5 to 10 is like, even like worst case next year, we can probably just do 5 to 10. So like, that's pretty great to kind of hear.
Yeah, just to like kind of double click on the whole demand thing. And I've been talking about this on my channel for a while now. Like we get too stuck sometimes in our Tesla, I hate to say echo chamber, but we just think in Tesla paradigm. And we forget that Tesla is literally so insignificant in the overall auto market that for Tesla to grow and double and grow 50% year over year, it's really not that big of a task compared to what the actual vehicle market is out there. You know, we're still very small compared to the bigger players. So I think even, again, to quote Elon, even in an extreme recessionary, type situation next year, if that happens, they'll still print money. They'll still have more than enough demand. But, before today's call, that was just me speculating. But again, they gave more of a hint of a demand issue last call than they did this call. And I think that's very telling.
So some other things I thought were bullish was they said they essentially figured out how to make the semi-truck at the same weight as an ICE semi-truck, so that there's no penalty on haulers being able to haul as much weight. This is something that I think there's some engineer at BMW, maybe it's their chief engineer. He said it's physically impossible for Tesla to do this, and they figured it out. So they deleted the transmission, they deleted other things that led to this. Some other things, they feel they can fulfill the battery day timeline, which is 2026, and all items from it. And Elon thinks they could do it maybe before, and it seemed like Drew agreed with him. And one of those items was lithium from clay. That would be a really big deal if Tesla could figure that out. The other item that we're not seeing yet in their batteries is the use of more silicon in the 4680, which would increase the energy density in those batteries. Those are some other bullish things, other good insights. And again, they talked about the compact. Nicholas, I saw you get excited about that, and it sounds to me like their intention is to make at least double, if not triple or more, compared to whatever else they're making. And maybe this is a 2024 thing, but my suspicion is Tesla won't announce it until they're rolling them out of the factory, just so they don't Osborne demand for the Model Y, Model 3.
Yeah, that was a tough part about this call. It's like, what's the most bullish thing? Is it the buyback? Is it Tesla saying that they're going to be worth over $4 trillion without the bot? Is it FSD 100%? Is it that they're going to make vehicles that this 2-for-1 concept? I mean, it was just hit after hit after hit, and the post market reaction just didn't move at all. But like everybody else said, that's all garbage hour trading. But But yeah, no, it just seemed like there's bullish after bullish thing. I mean, I think we should start from if Farzad wants to share the notes and just kind of make our way down and just kind of touch on things here and there.
Yeah. Are you guys cool with that?
Because who knows what we forgot? There's so much.
Yeah. I mean, I can sort of hit the pointers here as we go down quickly, and then if anybody has any comments, we can do that. I mean, I'll sort of share the biggest thing. So the bullish after bullish after bullish at the beginning of the call really stood out to me. And what that tells me, and I think Gary brought this up in one of his tweets, is that I think this sets the stage. Elon's trying to set the stage that says, hey, Tesla's in a really good spot, and I'm going to buy Twitter, and I'm just going to go ahead and do that, right? And it might mean that he might need to sell a little bit more shares here in the coming week or two to make that happen. But the bullishness behind his statements, I think, was quite rare. And I saw a tweet from Sawyer as well, as I was just pulling up my screen here on the other side. I guess I missed it. But I don't know, man. I think talking in market cap terms on these calls, typically, I don't know. I feel like the last couple of times, the last time Elon did it really was back in, say, 2018 timeframe, when Tesla completed the ramp of the Model 3, and then we all know kind of what happened after that. The market sort of came to a conclusion 3 to 4 quarters after that. I don't know, man. It just a lot of the fact that Tesla is so well positioned versus every other company. It's going to be. I don't know how much longer it's going to take for everyone to realize that this is going to be one of the very few companies on the stock market, if we go into a recession, that is actually going to be generating positive cash flow. I don't know why this is such a hard thing for people to wrap their heads around. But anyway.
So far, can I actually jump in with one thing on the? I'm sure we get to it in a second, but I just ran some numbers.
Please.
On the, like the subcompact, whatever they're going to call it, the Tesla Q, call it what you will. So one little nugget that they dropped, which I thought was pretty interesting, was that they thought that it was actually going to be only about half the cost to produce as, like, say, the Model Y.
Yes.
Which is ridiculous if you think about that. It's like the average cost of goods sold this quarter was around $40,000. Model Y probably is a little bit lower than that, but let's just take that number and run with it. So that's implying essentially a $20,000 cost of goods sold, which, if you were to stick with the $25,000 original price that they were talking about, that's still a 25% gross margin for something that would, like, for sure dwarf like the volumes of everything else, and that's without full self-driving attached as like a $15,000 or $20,000 option. So like that one data point to me was just like really mind-blowing of like, I think Tesla's undervalued just on the kind of core base sales of like Model Y and how profitable their business is. But when you start thinking of like all the different stuff that like is just not even included in the valuation yet. And this one is one that I have not really included at all. It gets really, really wacky.
Yeah, this to me feels like 2018 again, 2019. That's what it feels like to me. It has the same sort of vibe. There's all this stuff and again, I don't want to sit here as an ultra bull and try to like make it. I'm not trying to pump the stock. I'm truly not trying to do anything that's trying to make this seem better than it is. But the vibe I'm getting is that the company has the capability in the next 5 years to become so much larger than they are now, and people are not reacting to that. Like I would have expected when Tesla, when Elon makes a comment around what you just described, the Optimus comments, the market cap comments. I'm like, okay, the stock has to do something in relation to that. It does nothing, and it's when they're hesitating a little bit on China demand in the short term, the stock goes down. I'm like, okay, it's 2018 again. It's 2018. This is the vibe. This is what's happening. So what's going to happen in the next 1 to 2 years? People are going to be late to the party. I'm like, holy fuck, Tesla should be a $4 or $5 trillion company. Boom, everybody's going to rush in at once. It's obvious. This is obviously where we're going. And now, outside of a force majeure or something where, like Elon, hopefully nothing happens to him, or there aren't 17 earthquakes and a nuclear, holocaust at the same time. Like to me, it feels exactly. I have the same exact level of conviction that I did at that time around this company. It's just now the next generation of products. And I might be a moron for thinking about it that simplistically, but that's exactly how I feel.
If we all keep on the bull, wagon train, that Gary's going to come back with his spinning camera again and say, "Oh, you're all too crazy. You're drinking the Tesla."
I'm trying to summon the Gary, the come fairy, come rescue me.
I also think if I highlight Apple and Tesla often because I think their stories are very different, but their trajectories might be similar. But Apple couldn't be any more different, right? If Tim Cook came out and said, "Look, this is our new product line. This is our growth trajectory. This is what we think we're going to sell." I mean, the market would bake the majority of that in the following trading weeks to months to years, right? But with Tesla, and for better or for worse, you can argue it's bad, argue it's not deserved. But for Tesla investors, institutional investors really, they need to see the execution before they believe the story. And I guess that's the risk, but that's also the opportunity, right? So if you believe that Tesla can execute, and I think Elon, Zach, and Drew made it pretty clear that this execution is not going to be easy. It's not going to be a walk in the park. They've said that multiple times. Like, this is assuming we can execute. This is assuming that it happens on our schedule. We know stuff doesn't happen like that. So I think it's important to highlight like both sides of that a little bit. Like, we believe in the execution story. We believe in the team. But Street doesn't, or Street maybe believes it to 50%. They're like, yeah, we get it. This guy loves talking hyperbole and making targets really, really like near in the future. But that's the risk, but that's also the opportunity as Tesla bulls. We believe more in the team than the Street does. And that's kind of like the synopsis of the story, I think.
Yeah, 100%. It's come full circle. We somehow at a 600 whatever $billion market cap, we're back now to that same exact thought process again, whereas a lot of people may have looked at the stock price 2 years ago, 3 years ago, like, well, it had a gigantic run up. Well, no, we're back to that sort of thought process again. We're back to this, hey, like, it's expectations, or it's let me see it first versus valuing you for what you're actually worth. Cool. All right. This is where you make money.
And also, it's a supreme setup as well because of the amount of shorts that I think are in Tesla at the moment. Like, we kind of got out of this like short squeeze era, but it does seem like, at least anecdotally speaking, there's more shorts now that there has been during the Fed bubble pump up. It seems like all of these shorts are piled into the stock market as a whole, especially Tesla. So, I think Q4 is really setting up supremely huge, but execution is key here.
17 billion. Yeah, so it's way more than the last few months here, for sure. It's 3x, 4x.
And by the way, Twitter is up over $53 after hours.
Yeah,
which signals to you. Well, it was for a hot second. Now it's $52.50, but it signals to you that the Street pretty much thinks this is done at this point. So
done deal. Yeah. 52.56 right now.
What did you guys think about their Q4 comments? I mean, I was kind of surprised by how bullish both Elon and especially Zach were about Q4. They were really excited about Q4 for some reason, even while they did say that the COGS was not going to show a very significant decrease. So I found that kind of interesting.
Yeah, I love the way Zach handled it. He said that we'll hit 50% for production, but we'll be just under 50% for deliveries. And I love that he set the expectation so that we can move forward without expecting anything else. And, maybe it kind of hedges what Q4 is and gives us a chance for a good surprise. But yeah, they were bullish as hell when it comes to Q4. Like, there's no denying that. I mean, you can't even sugarcoat it. They didn't even try to underplay it. I mean, hearing the way Elon was talking about it, it's like, okay, all bets are on.
Yeah, I think at first he said something like, we're very excited about Q4. And then it was 10 minutes later and he's like, oh, we're extremely confident. Like, Q4 is going to be like a record in every way. And it was like, what he actually meant was on that second comment. It was pretty interesting.
What he actually meant.
I agree with you, Farzad. I feel like this is late 2019. There's just all this good news that keeps stacking on each other. So it gives me a lot of confidence for where a lot of us see Tesla going in 5 years from now. Curious to see how Q4 shakes out, but I'm guessing one thing I missed when they were talking about Q4, so I'll have to listen to it again. There's a lot to the call, but the way they were talking made me think like they're very confident about Q4 and then entering next year and being able to get the vehicle tax credit and get other things. They talked about getting 4680 to $70 per kilowatt hour before incentives. So, they're thinking about the battery incentives and the module incentives that the IRA has in there. So like coming away from this, I'm over the moon, but if we watch it back, you'll see my face when we first saw the earnings report. I was just like, I thought it was like a rotten egg. So, yeah, I'm.
How do y'all feel about Elon's mood? He seemed to be in a very good mood on the call. I don't know if you guys discussed it while I was stepped out for a minute, but
no, we were just talking about
like
you.
It was perfect, great. It's only entertaining. I don't care. It just seemed like he was
that
laughing
spot on your face this whole live stream.
What are you talking about?
Oh, nothing. No, don't worry about it.
Don't worry about it. It's okay. Yeah.
I'm just trolling you. Don't worry. There's
I figured as much. Yeah, I figured. I felt like his. Anytime Elon's in a good or bad mood, to me, there's a signal of like some form of hardship that he's going through. But it seems like as of late, it's been hard to find Elon in a bad mood. I feel like he's been mostly in a good mood, which I think signals that the businesses are doing well. Hold on a second. I'm going to give a shout out to Ishan here, this crazy freaking person. So 100, I don't know what that currency is, dude. I'm sorry, but thank you very much. Elon is so bullish, but Gary ain't gonna be a happy man. Russ, jump in. Would love to hear Boomer Mama on this though. Yeah, so it looks like Alexandra was having some internet issues there. So unfortunately she couldn't join us, but yeah, I do feel like Elon's mood was quite positive. Yeah, sorry, I wasn't sure if anybody had any thoughts around that. No. Do we want to go through the notes real quick, or sorry, go ahead.
Yeah, I was just gonna say, yeah, I mean, I would say anytime you say that Tesla has the roadmap to be bigger than Apple plus Saudi Aramco combined, yeah, that's pretty bullish. Like that, those are the two biggest companies in the world by market cap, or at least they were at one point. A big thing that, and I'm really curious to hear everybody's thoughts on this. So semis are not using 4680 battery, but on that same note, it sounds like 4680 battery ramp is happening really well. So that's kind of a juxtaposition that I didn't expect to walk away from this call with. So what are your guys' thoughts on that?
Yeah, I mean, it seems like that's really good news, especially for Berlin and Austin. I don't think it's necessarily going to translate directly to like awesome Q4 results, but it's a really good sign that they figured out how to get through those production bottlenecks, so that in next year sometime they can really get those local production lines ramped up. So to me, it's a good sign, but it's one that's not necessarily like a very short-term catalyst. But it's gonna be one of those things where we're looking at operating margin like 12 months from now, we're gonna be like, oh my gosh, I can't believe like everything's clicking to this level. So yeah, it's I mean this is why I think they're so confident in their business model, because like if they have to lower costs, that's fine. They can lower costs, but their cost of goods sold is going to continue decreasing because they find all these efficiencies and they continue to ramp up. And then they introduce lower priced products, which opens up their total addressable market. It's like, yeah, when like, gas is $8 and, people are really concerned about the planet warming. It makes all the sense in the world that, EVs are going to continue to take market share from ICE. So like, I kind of understand, the Garys of the world and their kind of concerns about, demand or whatever, but it's like the trends are really clear here about what's happening. And I think Tesla's got so many levers they haven't even started to pull yet. I mean, like marketing, when's the last time we talked about marketing? But if there was really a demand concern, don't you think it might make sense to spend like, I don't know, $50 million on marketing and just see what you can get? So I don't know. I just, there's so much upside here. It's kind of nuts.
Yeah, that comment around the gas cars was one that really stood out to me. I put it in bold just now. Just a quick quote. The world realizes that they are moving to EVs. It's foolish to move to an ICE. Signals to the death of the IC. That was sort of my little note there. Tesla's in a good spot. Tesla is recession resilient, quote unquote. People of Earth have made the decision to move away. Transitioning electricity to solar and wind, you need batteries, which falls into Tesla's business model. So, I mean, to me, this speaks just as much about Tesla's ability to grow into this sort of market that we stand in. And these comments point to everything else kind of sort of starting to collapse around us, right? So I'm curious to see what sort of dynamics will arise, not if, when your GMs, your Fords, your Volkswagens, all these companies that are heavily dependent on gas cars to make money start to falter. And then you have this company on the other side that's, again, free cash flow positive in a large way, is initiating a buyback, has leading gross margins, has software as a service, has new products coming through. I wonder if any of this is dynamic that's going to become more and more evident, I hope, to the broader market, will somehow influence more of the market to view the company like this group does, in a sense. Do you guys have any thoughts around that? Am I being too hopeful here? I'm curious to hear y'all's thoughts. Go ahead, Bradford.
Yeah, if you're a luxury car maker, you can't feel good that Elon basically said, rain or shine, we're looking to grow production and deliveries by 50%. BMW, I think, is going to be in a lot of trouble. And where all the legacy car makers are making good money from right now is their luxury side. They've been focusing their units on luxury because they're short on the chips. So they're focusing there, and their profit center is coming on luxury, and that's the number one space that Tesla is attacking. So I think you're onto something here.
Okay.
Yeah, so many demand levers to pull if need be. So FSD by the end of the year, beta. I can't get too excited about beta. I know I'm kind of a party pooper there, but it's essentially wide release already. Like we joked about, if you're under an 80 safety score, we have to have a private conversation with you anyways about your driving habits. So it's it's pretty much there at the moment. I don't think there's going to be, I mean, Matt, I was going to ask you this, but why would Tesla be able to unlock deferred revenue from FSD beta wide release? Would it not have to be a full-on beta or a full-on beta removal from the FSD program for that?
So it's a little bit up to interpretation. The thing that they said, it was probably 2 years ago now that Zach made some comment on there, but they did speak at the time of when it goes into, broader release within certain geographies, they would recognize incremental revenue at that time. So to me, that does sort of make sense. But from an accounting standpoint, it's just that you delivered, functionality to these customers. And if you have fully delivered everything that you promised to deliver, and from an accounting standpoint, you don't need to deliver robo-taxis because you didn't sell your customers robo-taxis. You just sold them like city street driving. So they've already essentially delivered that. So if they want to be super conservative and say, beta doesn't count, they can keep doing that forever or for the foreseeable future. But my sense is in Q4, based on all these comments, it will go into truly wide release, and I think they'll recognize that incremental deferred revenue at that point. So it'll be a bit of a boost, but I think analysts are going to, back out that one-time benefit, even though there is an ongoing benefit as well.
Right.
Yeah.
Go ahead.
Yashu, I watched your video of you testing FSD beta for the first time, and I think every geo is a little different.
Right.
But I can tell you right now, if you drove it with me here, you would think, wow, this is ready to go almost. The only thing it's missing is how do I pull into a parking lot, because Chipotle keeps saying that it's on the highway, not on in the parking lot, right? It's just this little map data issue that I think they'll figure out. But with AI Day, them talking about, and they didn't actually talk about this. This is a side comment that was made there in AI Day that I haven't seen a lot of people talk about, but they mentioned how they're going to have all that figured out before the end of the year, that they're going to have the parking lots figured out before the end of the year. Some and all that's going to be figured out. But But even watching Farzad with his wife and grandpa, that was, from what I've seen that you've put up, that's the best that drive has ever been. And I'm sitting there like, okay, like even a couple times where you took over because it was going to miss a turn. It's like, even if it rerouted, you know how many times I deal with that with Uber, where I just want to tell the guy like, hey, just take a left here. It's faster to get to the airport. But I'm like, you know what? I don't want to engage in a conversation because then I'll be engaged in a conversation. You know, it's like, it's a true story. But, and I know Matt has different experiences with FSD beta, but I just the experience I'm having, it's game, set, match. It seems like it's coming. And if they feel this confident with whatever version Elon and them are testing, this is just going to be game changing. And hearing the confidence with less than 3 months to go to the end of the year, and then the way they're talking about it being way better enough to show to regulators next year, without a doubt, that man, talk about the best call option you could possibly want in a company. And I'll shut up now, but I'm so bullish on this.
I personally was a little bit skeptical of his comments of like, oh, it's like going to be, I don't remember exactly what he said, but it was something to the effect of it's going to be like done at the end of this year. And done is a very like abstract word. And like right now, technically it's done, you could say, because it does everything, with minimal mistakes, but it does still make occasionally some safety critical mistakes for me. And more often just like, very rude behavior or just like things that are uncomfortable, or like if they were repaving the road out by my house the other day. And like, so like there were no lines on this whole, like 3-lane road. And so it was just like a drunk sailor, just like going around like all the lanes, like back and forth. And I'm like, why don't you just like stick toward the middle line and just like try to go straight there? So like in my mind, it's got in my mind, it's got a lot more nuance and like way more nines than I think Elon was kind of letting on in this call. That's my own point of view, but you're right. It's very geography specific. And some of the issues that I've had that were like horrible were just gone in a previous update. So I don't preclude the potential for like all these things that I'm seeing now. Just like one day I wake up and I'm like, oh, well, actually it's like mostly perfect now. Like that's a very real possibility.
So just to throw my 2 cents in there, I think what's happening is that I think the way Elon thinks is that if it gets done in one jurisdiction, it's going to get done in all jurisdictions. And so if his head, it's like, well, if Florida gets solved, then this is solvable everywhere. And we are almost there to solve it in one place, which means that it's basically solved, but it's all about the ramp. So I think that's how I think about that concept. So Matt and I will probably be Q3 of 2023, but Nico will be Q4. Bradford could be Q4. And Mars whole catalog could be tomorrow, right?
Right. Yeah. Just to level set too. Like I'm fully aware that I live in my own geo echo chamber, right? But it's what I have to go off of it. And after this, I go off of watching other people's videos, right? Like, I mean, Chuck Cook, I would say even he has pretty much flawless drives, but he's in Jacksonville, which is about 4 hours away from me. But still, like, I'm aware of everybody else. I'm just specifically referring to my experience, and this is still a beta. It still needs to be treated with caution. So I just want to put all those disclaimers out there.
Yeah, we could talk about a million things. That's the best part of talking about Tesla, is all of these little facets that we're talking about that really don't mean much in terms of forecasting for analysts today that will be in the next 5 to 10 years. That's the amazing part of this.
So I could share a FSD story. I have this challenging part where the car has to get over multiple lanes to get on the interstate from a highway, and there's like this parallel road to the highway, and then there's the interstate. So it's got to go across the parallel road line, then to the highway, and doesn't have much time. And I'm hearing in Austin it's doing this with many more lanes where it's getting over, and it's getting over quickly. So that was like my equivalent of the Chuck Cook left turn. There's like a spot on my drive in my neighborhood where it does this hard stop. The stop sign is below, like the car has to go like this to get to the stop sign. It does this hard stop before it gets to the stop sign. it still hasn't fixed that. But like, yeah, I'm confident they'll get there, and we'll see. I share a little bit of Matt's skepticism. I live in an area with a lot of roundabouts, and it's struggling a little bit with roundabouts right now.
Yeah,
I do want to I want to give some credit to Gary, to Alexandra, and Leo Kogwan. They were talking about the buyback past couple of weeks, and apparently the board's been talking about it for a while. But I appreciate their communication and their leadership on the buyback. Again, Alexandra is making some headlines, and Gary was exploring the issue with some legal counsel, and so all that was very interesting.
I think what's fascinating is that Tesla is listening. I mean, it's proof that they're listening to that feedback, and that's really, and they're listening, and they're responding to it relatively quickly. It's not like a thing that's just sitting there for a few years. There is a group of people in the community that are like, hey, this makes sense. And then within a month or two, they're like, you know what, we agree. We just got to finalize it. That should feel good as an investor, right? To be heard.
So besides high level, I mean, it's easy to say, okay, there's a buyback that obviously shows the company believes in themselves. But for all of you guys are more in the finance world than I am. What deeper implications do you guys take away from this? Like, what does this actually signal, if anything, other than just confidence in the company moving forward?
I think Tesla's unique. In general, you could say a buyback means that the growth is slowing down in the company, but it's not. What's amazing about Tesla is they've just gotten more capital efficient as they've gone on. So they're not. Elon said we're trying to spend the cash on everything. He was talking more about R&D, but also just building gigas and battery stuff, and we can't spend it fast enough, and we're still growing our cash. So I think that's a unique situation. In some ways, Apple's similar in that they don't really want to acquire any companies, things like that. But like, I don't think the growth days are over for Tesla, and it is meaningful to, if Tesla buys back hundreds of billions of shares over the years, that's going to be extremely meaningful, and retiring shares, and it should be good for their bottom line in a way. So I think it's a good thing overall if they feel that rain or shine, that they're going to be growing cash anyways.
Yeah, I mean that's one of the things that really stuck out to me was all the kind of sensitivity analysis that they were talking about. Like, even if we spend every single penny we can on R&D and there's a recession and we do a $10 billion buyback, we'll be fine. And it's like, so like then fast forward to, let's just say 2024, 2025, pick your year, when, they've grown by 50% twice by that point. And so then what they could, if things are more normal and, they've got a much larger, free cash flow base to start from, maybe they do like a $30 billion buyback or something like that. I mean, because the kind of operating leverage they have, it's like if the top line grows at 50%, the bottom line is going to grow by a lot more than that. And so it's really nutty to think that like the downside scenario, they can still afford a $10 billion buyback. So then what does that imply? It's not like this is going to be a one and done sort of thing based on the commentary they had right there. To me, it's like opening that door. And when you fast forward a couple of years and be like, okay, yeah, they could definitely be buying like $1 billion a month, like in very short order. And that's really impactful, I think.
Yeah. Buybacks are usually not like a one-off thing. Like, it's a program that you're going to set in perpetuity usually. And I look at it pretty simply. When Tesla raised capital a couple of times in 2020, when the stock price was just soaring, everyone was on Elon and co. Why are you raising capital? Why are you doing this? It's just a reversal of that. If you want to take a very simplistic approach, it's like hey, we needed an insurance policy when our stock was really rising fast and we didn't know, and scalability. And now it's like, hey, we don't actually need this. Have it back. And maybe at the bare minimum, that's the only way to look at this. And there's no other buybacks in perpetuity past it. It's only like a one-off thing. But at the very least, it's like, hey, thanks for the cash in case we needed it. Turns out we really don't need this cash. So
yeah, that's well said.
Reverse capital raise.
Another exciting thing from the call is they said when we're looking at out years, which means years in the future, it sounded to me like there's at least 2 years where they feel their growth is going to be meaningfully far in excess of 50%. That was I'm curious what they're looking at. They're probably looking at the compact and I don't know if they're starting to model the bot into their own business, but
well, that's
I'm curious
what I'm thinking.
What's driving that?
I mean, it's got to be the bot. It has to be full self-driving. It has to be the compact and whatever else we haven't seen yet. Full self-driving, right? I mean, I've done these play models on my channel before. I've done it like twice. One with the stock through 2035, and then a bot model that I did through 2040, just for fun, just to sit down and be like, okay, like let's sit down and figure out if this comes to fruition, let's put some numbers to it. And the numbers are stupid. They're dumb. They make no sense. But trying to sit down and figuring out, okay, if this actually comes to fruition and they execute on it, why couldn't this be one of the possible outcomes, right? And what is the chance that this possible outcome happens? If I'm saying $93 trillion market cap by 2035, or even $40 trillion market cap by 2035, and there is a 25% chance that happens, theoretically, if you adjust it for that risk, it's a $10 trillion market cap anyway. You know what I'm saying? So it's like, okay, that's more than a 10x from where we are now in the next 10 to 12 years. You know what I'm saying? Like, it's okay, cool. Like, and to this day, I'm still like confused as to why the market is not visionary in this respect. And I get it. Like, the market has to be focused on results. I get it. But there seems to be such a vast disconnect in execution versus that the value that the company can. I'm just gonna rant. I'm ranting now. I'm just gonna shut up because I've said this a million times already.
You know why?
It's
because
confused.
You were born in Spain. This is what we do. We talk. We eat dinner at 10 p.m. We stay up till 4 a.m. It's what we do.
Yes,
that's
true.
So again, I'm gonna go back to Matt, Bradford, Yashu, the more financial related people. Okay, so something I thought was fascinating was when Zach was talking about margins, because we kind of got the answer. Why didn't we see margin improvement? And he pretty much said it takes time for all of these deflationary effects to make it their way into the numbers. Same thing that everybody kind of hammers the Fed about right now with Kathy Woods, Elon, etc. But did that, in your view, in your eyes, did that essentially answer why margins weren't better than what they were? Or do you think that was kind of a cop-out? Channeling Gary Black here.
I mean, I'll say I was a little bit disappointed with the commentary, the results, to be honest with you. Especially, on the back of Martin's recent comments of, saying the cost of goods sold is 36,000. Well, it was like 4,000 higher than that this quarter. So to me, that seemed like a little bit of a bait and switch, or like he was taking, the Q1 numbers, as far as I can tell, to get that figure. And so, based on that commentary, I was kind of expecting that, with the higher kind of ramping in Shanghai, and the operating efficiencies that you get from higher volumes, would really help to kind of bring that cost of goods sold down. But it actually increased sequentially. And so he also said that the ramping in Berlin and Austin helped to drag those costs down. Which of course makes sense, and which I was assuming, but it had apparently the whole mix of things together had a much bigger impact than I was expecting. So yeah, I mean, to me it was disappointing that they essentially said that cost of goods sold is going to stay about where it was, in Q3 for Q4. So I'm going to have to go forward and revise down, I think, my own estimates, at least for cost of goods sold. I don't know, Bradford, Yashu, if you guys had thoughts.
Yeah, I think it makes sense. I think the ramping of Giga Austin, Giga Berlin, they say was a material margin impact. So yeah, it makes sense, but I'm not too worried about it. Again, I think it's a short term, and we're really talking like 28% gross margin XF credits, or 27%, like still pretty great. Yeah, it could have been higher. I think Tesla will get there eventually, but the ramping of these factories is not like Shanghai. That's what we've learned here, is like Shanghai would really was on a league of its own. And then when you add in 4680's new tech, new everything, just a lot more cost there to bear.
Bradford, you want page 5.
Yeah, they talked about higher raw material, commodity, logistics, warranty, and expedite costs. The foreign currency impact of 250 million, and then as we talked about, Giga Texas and Giga Berlin. Those were the major drivers. Yeah, I'm shocked that ASP is 40K if that's right.
That was cost of goods sold, not ASP.
Oh, okay. So we'll see how this trends over time. I'm guessing the raw materials costs and Giga Berlin in Texas. I guess it makes sense that you're starting to deliver more and more cars from those, and it's pulling things down. And maybe Tesla Bulls as a community got a little excited about where margins can be. I think, I thought they could match Q1. I didn't see why they couldn't go back to Q1 as far as their margins then. I think it was 32.9 or something in Q1 for gross margin. So, that is definitely a little disappointing, but I feel the path forward is looking good, and I'm curious to see when costs do come down.
Yeah, it'll happen. It'll take time. It's I think it's a good reset for Q4 to reset expectations down and revise down a little bit. But I mean, we're not talking gross margins being low 20s. We're talking, instead of 32, it's like 28. Still world class, still in the middle of the ramp.
Yeah,
so
terrible.
Yes, still 4x, 3x more than everybody else. It's so ridiculous.
Second to Ferrari. I guess one thing we should temper is, they're ramping 4680 in Berlin and Austin now. So maybe there's two different lines in each factory. One's 2170, which they're ramping much faster, and that'll get profitable faster and have better margins. But that 4680 is going to be slower. It's still growing at a rapid rate, but it's just at a much lower base, and that may eat into margins longer than we thought as far as 2023. So maybe some 2023 numbers might be coming down among the Tesla Bulls and Tesla community.
What's interesting about that, though, is so you're completely right about everything you said. But in the product roadmap of the battery cost savings, that once 4680 actually ramps, you'll go from way higher than the 2170s to way lower. So it's you're in the worst part of the S curve right now, where you're trying to figure this stuff out, and you're ramping low volumes at very high cost. And they've even said that all the cost savings that they've had to date have had basically nothing to do with reduced battery costs. So they've just really through gigacastings in Shanghai and everything, just stripped so much cost out of the car, but they really haven't seen any cost savings from the single most expensive component of the battery. So to me, it's super exciting that this is a bit of bad news in the short term. Excuse me, but
you're choked up about it. Thinking about it, hey?
Here,
I got a little oat stuck in my throat.
Here.
Farzad's wife brought me this little dessert thing too.
Yeah.
Don't you dare.
All that oatmeal, the
Take
chocolate
my
chips getting
wife's
caught
name
in the
out of your
throat.
mouth.
That's a good point, Matt. And another thing that's exciting is they said we're aggressively pursuing iron cathode supplier in North America, whatever that means. And iron cathode will help drop the cost further. And especially if they can incorporate that in 4680, that would be really good.
Curious, what did y'all think of that mining comment? So that the first question I was asked by Adam Jones is kind of related to this. Is so do you consider mining being vertical integration? And then Elon, so if I read my notes real quick, we can't constrain ourselves. We don't vertically integrate for the sake of vertically integrating. If suppliers can be good enough, they won't integrate. But if they have to go mine, they will mine. How do you guys think about that?
Yeah, I think they want to
See
avoid the
smiles.
optics if they can of going into mining, even if lithium mining is way better for the environment, way better than coal mining or whatever, or like pumping for oil. They want to avoid those optics, but if they feel they have to, that's what they'll do. And I'm guessing if it ever comes to the point where Tesla's plans or their 50% growth rate or whatever the growth plans are is threatened by not getting these things in line, then they'll take a more drastic action. What do you think, Nicholas?
I think that they strategically had decided on how to talk about this. And then later in the call, I think Drew kind of insinuated that they are doing this. And it was just when they were just kind of like, they were just kind of talking amongst each other and just joking around. And which, by the way, I love that they did that. It just shows like the good mood that they were having. But in that conversation, Drew kind of talked about how they are going to be mining on the coast of the Gulf of Mexico. And I was like, oh, so you guys just let the cat out of the bag. I don't know if you guys caught that.
He said refining. Refining.
Yeah, refining. Excuse me.
Yeah.
Excuse me. Yeah, correct. Yeah, sorry. We're live, so I make mistakes. That happens.
That's okay.
But yeah, thank you. But yeah, so I was like, all right. So before you had this button-up answer, and then now when you guys are just kind of rapping amongst each other, you kind of let the cat out of the bag. So yeah, I think it's highly bullish, but they're trying to keep things close to their chests, which I'm happy about as an investor. I don't want them to tell us everything. I don't want to know everything. I want them to have a few tricks up their sleeves, and I don't want the competition to know everything they're doing. The same way that Elon was asked about future products, and he's like, "Yeah, we could tell you, but we're not going to." I think that's bullish. They are 3-4 steps ahead of all of us, and I think Tesla investors maybe have one step on Wall Street, and that's where the big delta comes as far as investing goes. But no, I think all the comments on that were very bullish, and I'm more hopelessly optimistic than I've ever been with all of this.
Hopelessly.
Yeah, I mean, hey, let's
hopelessly optimistic. That's
we're still there.
Hey,
you should change your YouTube name to that. Hopelessly optimistic.
One thing I want to put out there is I think if we can use the hashtag Tesla profits. I don't think people still understand how profitable Tesla is. For 10 years, the media beat on people how risky Tesla was, that they're going broke, that Elon Musk is not the right person. He's a wild card. He doesn't wear a suit, and that's a bad thing. And I don't think people have adjusted their beliefs about Tesla. So if we can raise awareness about hashtag Tesla profits,
yeah,
I appreciate that.
And to echo that, watch what happens over the next week or two. I believe, and again, I'm not the finance expert on here, but I believe if you add up GM and Ford profits, I believe Tesla will exceed them. Ford and GM combined, I believe Tesla will exceed them.
Exciting times. Yeah, I'm not actually. I don't know EBITDA offhand for.
They almost did it last quarter. I believe this quarter it'll happen.
Close. Yeah. Well, actually, I don't think so. EBITDA, I think Ford is at 4.4, and Tesla just hit close to 5.
I think I'm thinking more like net income.
Oh, okay, yeah. Oh, yeah, probably. I think then at that point.
Yeah.
I think the question
once you back out that interest expense for sure.
Oh, stop it, Matthew.
Yeah.
Stop it.
Awesome.
Maybe one other thing on the notes here, and I know we're almost at hour 4 here of our stream. By the way, I don't think this is awesome. This is like the best stream ever, honestly. I think Tesla, and Ross talked about this a little bit earlier in the stream, like such a unique group of people, and the fact that we can all sit down and do this and sort of shoot this over multiple channels, and we get to sit down and collaborate the way we do. I feel very thankful to have connected with y'all, and I honestly consider all of you a friend. So like, I want to thank you guys so much for taking the stage all together. Matt's like, fuck you, I'm not your friend. No, but seriously, like this is I'm very grateful to have met all of you, and I'm very thankful for all of you. And yeah, thank you all so much. I learned from every single one of you every day, and I just want to thank you, seriously. And I'm also a little drunk, so of course my niceness is going to come out.
I appreciate you setting all this up. Like, it takes a lot of work, and I think it was a huge success to do a simulcast and get everyone that we did on at some point. Too bad we didn't get Alexander on for longer than a couple of minutes, but yeah, it's super. It's like an awesome like little hive mind, and Gary, fighting back with us, which I loved. Like, this is awesome. Like, it really can't get better than this. So.
For sure. Yeah, for sure. Maybe one last comment here. What do you guys think about Elon calling out Cathie Wood on the call and saying that she's right and that the Fed is looking at the rearview mirror, not the windshield, on a quarterly call? Did you guys take anything away from that?
Not too much. I mean, he's been saying that for a long time now. So, I don't think the market clearly doesn't agree with him, or, at least think that a pivot's happening soon. So, to me, it's like one of those things that he'll probably be proven right in 6 months or so, and they'll be like, "Oh yeah, we should have listened to Elon." But I don't think it's going to be the sort of thing that moves the stock, or that most people will think he's right.
Yeah, no, I think he quote tweeted her already, showing his agreement with her. So yeah, didn't really think too much of it, to be honest.
Okay.
Yeah, I guess I thought a lot of it. I think it's the most obvious thing out there right now. I mean, you see it everywhere. If I go to any store right now, if I go, and maybe I'm just geo-based and that's what I'm seeing, but you see discounts at 70% left and right. I mean, everything's clearly coming down, and everything the Fed talks about is always all of these rear view mirror type numbers, everything. And they don't ever talk about anything forward looking. So again, I know this is about Tesla and not macros, but it just seems more obvious than ever. I have this this metric that I'm using where I have this like really rich community right where I live by, that one day I hope to buy a lot of land there, but it's a very expensive area to buy in. And I've been watching the prices of mainly these two houses that they started at 1.15 million. And these are just houses you would tear down and build. And now they're down to 850. And that's just one little example that I'm seeing. Like this is crazy how much this has come down by. And then you see everything else. It just seems very obvious that things are coming down. But the Fed has to do what they have to do, right? They have their metrics, they have their numbers, and they don't want to screw up. So it's this juxtaposition between the people who think they know and they see what they see, and the Fed who will be on the hook for if they're right or wrong. And I think they would prefer to be wrong on the side of deflation rather than inflation. So you have to empathize with that as well. So it's a tough place to be, and it's easy to be here and do some backseat quarterbacking, but it's not an easy place to be at all. But I do think Elon's right, but at the same time, I think Jerome Powell has all the pressure on the world on his shoulders, and he has to be as conservative as he can be. So I think they're both right in their own way.
And shout out to Bradford for being at Disney World right now and still coming in.
Yeah,
that is
dude.
hilarious.
Are you missing the fireworks right now, bro?
What?
That is not missing crazy. The fireworks.
The fireworks started about an hour. Yeah, I thought it was a big deal. He mentioned Cathie Wood by name, and she's been an ally of Tesla for sure. So it's a bit of a loyalty move, but he also happens to agree with her. So I think it is cool that he has her back. It's been very hard. I'd say about almost a year now for ARC, folks at ARC, and I hope they pull through. And I agree with Elon, and the Fed's starting to get a lot more pressure. It's not just people in the U.S. that are upset now. It's like all the central banks.
Bank of England.
Yeah. Australia's upset. Japan.
The balance strengthening is a real problem. Like it's a legitimate problem for like everyone. So Yeah, I think the pressure is mounting, but that doesn't mean that they're going to react in time. So I don't know. My sense is it's going to take another, maybe early 23 or something like that until we actually start seeing them soften language or something. But I hope I'm wrong and it happens sooner, but I don't think it's going to be soon.
Yep. I'm going to hop for now. I think I did about 20,000 steps today. That's a pretty standard day at Disney. And
yeah.
Yeah.
Which Disney are you at?
I'm at Disney World, and today we're at Hollywood Studios, and
nice.
Got to geek out on Star Wars and Toy Story and all kinds of good stuff.
Did you take your kids with you, or is it just you?
You better take your kids with you.
Yeah,
it's just Bradford by himself.
2 kids and my wife, and it's a good time.
Awesome.
Anyhow, take care, guys. Bye for now.
All right, see you, man.
Later, Bradford.
All right, Bradford. Thank you so much, man. Yeah. Anybody else have any closing thoughts? I mean, I think we'll probably reach a natural end here. Anything else y'all?
I'm really glad that Elon didn't rant about nuclear war. That was I was a little bit afraid that he might go down that Ukraine rabbit hole, and I'm just really glad that was not.
Me
thing.
too.
Yeah,
me too. I was almost scared that demand question was like gonna sort of get him started on that, but thankfully he was very professional and said, "No, I think we're fine. We think we're fine." And it didn't go down the, I put it on the comment section for y'all as the live stream. It's like, well, I wouldn't be worried about demand if we don't exist. I'm like, fuck, okay. So that's like a possibility knowing Elon, So I'm glad that didn't happen either. It was a very nice mixture of like professionalism and being loose as well, which is sort of like the standard Tesla call. It's very different from what we're used to from other quarterly calls from other companies, but it was nice. There was nothing really alarming. I think the only thing for me that stood out was the hesitancy around he was very careful around the language when he was being asked directly about Chinese demand, but he reinforced the fact that Tesla is not going to have a problem from that perspective, or at least they think for the foreseeable future, especially in the long term. So, but the confirmation I got from that is that China is very much having tough times. So it's not just Western media or propaganda, whatever you want to call it. China is legitimately going through some tough times. And this is yet another signal that we're getting from somebody who is quite honest about their feedback, I feel, that part of the world is having some hardships, but he doesn't believe that Tesla is going to be impacted by it so much. But it will have some repercussions. So something to look out for.
Yeah, it was interesting. He called it the export hub. So he kind of tried to couch it, I think, in doesn't really matter if the local demand is soft. At least that was the way I kind of took that. But
yeah,
likewise.
And none of that should be a surprise to any of us. I mean, the fact that China is not releasing Q3 GDP numbers, come on, this isn't rocket science here. Yeah, you don't have to be a Gary Black to figure that out. But I think this is a very bullish call. Honestly, I think everything that I heard was spot on. They addressed the demand issues. They addressed all the 4680 battery potential issues. They addressed the ramp up. They talked about demand. They talked about forecasts for Q4 and moving forward. I think they hit everything on the head as they should have. And this aftermarket reaction it's just noise. And I bet it happens over the next couple of days, but I guarantee you towards Friday that we probably see some short covering because nobody wants to go into the weekend holding, bad positions on Tesla. But I think Tesla, the team there, they did exactly what they needed to do. And I couldn't be happier as an investor.
Yeah, and Yashi, is this quad witching day coming up?
Is it the third Friday? Well, it's not the end of the quarter.
Yashu's my option guru. He doesn't know that, but I when I'm at work and I need like background, like some people listen to music, I listen to Yashu on Power Hour. That's what I do.
That's what I love. I love to hear that. Thank you. No, I don't think it's quad witching day.
Okay.
I think
no, that was last month. Sorry. Yeah.
Yeah. I think it would be December 16th or something like that.
Yeah.
Yeah. No. Much love. Well, thanks Farzad for setting all this up, man.
Yeah.
Crazy.
Of course, man. Thank you all for taking part. It looks like it went quite smoothly. I think we were live on all channels. We were live on Tesla 247. Thank you everybody who took part on this. Hopefully it was valuable. Hopefully it was a little entertaining. There was some really cool moments there with like Ross and Gary going back and forth. That was quite entertaining. I had a blast watching those two go back and forth. They should start their own sitcom of sorts. But no, thank you gentlemen very much. Honestly, like I really respect you guys a lot. I view your content often just to learn, and I'm honored to be able to share this stage with you all. So thank you guys very much. Thank you so much.
Thanks for doing it. We did have, my power went out like right when the earnings report came out. So to me, it did not go smoothly, but that's just, for some reason, I always have some major technical difficulty like that.
Well, we don't care about you. You went to Michigan State. Who cares, bro? Come on. Now.
Fair enough.
And thanks for everyone watching across all streams too and hanging out with us.
Thanks, guys.
Very bitter end.
Yeah.
Appreciate
Thank you
guys.
all.
I see everyone in the chat.
Let's do it again for Q4. Yeah.
I'm down.
Absolutely.
We should do this every quarter.
This is beautiful. Yeah.
Hell yeah. Yeah.
Cheers,
Super
everyone.
fun. All right, everybody.
Take care.
Thanks, everybody.
Cheers.
And broadcast. Here we go.